first virtual BURSA Marketplace Fair, we are glad to have you here. Please watch this short walkthrough video on how to navigate the virtual platform. You are now in the virtual event lobby, where you can navigate to any part of the event. Here, we have our virtual exhibition hall with a lineup of all our exhibitors. This is our agenda for the day. Be sure to attend the sessions you're interested in. Our conference hall pages where you can navigate across pages or ask questions. Our speaker page with the lineup of all our distinguished speakers. Our event survey page. Be sure to fill this up during or after the event. And here is our giveaway room, where you will be able to win amazing prizes through the giveaway and tournament. For the giveaway, just complete 2 mandatory tasks and a combination of 2 of the additional tasks to stand a chance to win. For the tournament, participate in all the 7 quizzes and stand a chance of winning 500 ringgit, 300 ringgit, or 200 ringgit. Let's return back to the exhibitors. Here, you can chat, video call, or meet up with our exhibitors. Below, you will find all the relevant information from about to contact details and their wide range of resources. To participate in the chat, please click on the chat button. This will send a request to the exhibitors to accept your chat. Once the chat has been accepted, it will appear in your direct messages where you can chat, have a one-on-one video call, and get the representative's details. In your briefcase, you will find all your bookmarked resources and the contact details that you have saved. Be sure to always look at our announcements for the latest happenings. We hope you have a wonderful event.
Hi, good morning, everyone. Good morning. How is everyone today? Happy to spend my Saturday morning with you. Too bad I can't interact with you via the chat, but apparently we can interact via Slido. So, my name is John, and today I'm going to present to you quite a insightful topic that I myself, when I embarked on the research, was quite amazed by the data. And the topic is really about how to find 10 baggers in Malaysia. Now, I'll explain what is the meaning of 10 baggers very shortly. So, who am I? I actually run a social media space where we help people under 40 level up their wealth through stocks. So, I'm on the right and my partner is on the left, MJ. So if you want to know more about us, go to that website. We have a YouTube channel called Viral. You know, it just stands for Finance in Real Life. Just head on to our YouTube channel, click like and subscribe. We produce at least one content every week. Right. So we always start with a disclaimer. Every time we come into a presentation about stocks where there's in so-called investment advice, I think we always put a disclaimer that we are not here to give advice. It is purely for educational purposes only, and it is an opinion of ours of when we do research and what we find as interesting case studies. So please do not take this as advice. Do speak to a licensed professional or your financial planner if you want to solicit any stock advice. All right. So, what are the key takeaways of today's session? And I'll explain it in four main chunks. The first takeaway is what is a bagger and why is it important? The second thing is the 7 criteria of what makes a multi-bagger. The third is actually why are these criteria actually very, very important to you as an investor? And the last, and I think most important part, is the skills and strategies that you need to look for the next multi-bagger. I can't talk about the future, but I can show you hints of what these companies look like by studying the past. Right? So, what is a bagger? It's actually a term coined by Peter Lynch in the 1980s. One bagger just stands for 100% gain on your stock. So, if you bought the stock at $1 and it turns into $2, that is considered one bagger. If the stock from $1 turns into $10, that's considered 10 baggers. Now, if you guys have never heard of Peter Lynch before, do check him out. Just Google him. I highly recommend 2 of his books as beginning reading for the value investor, actually. All right. So, how do you want to ask questions and interact with me on this session? The link is there, slido.com, hashtag hall2. If you have a QR code scanner, scan that QR code on the right, right? You should be able to see the questions coming up. As I do not have a feedback directly in my Zoom chat, I would only know your responses through this Slido. So I haven't even done the check whether you can hear me clearly or my video is clear. But if you can't, please go to Slido and give me that feedback. All right. So before I proceed as well, as good fiduciary duty and part of the CFA charter, here I'm disclosing the stocks that I own so that you do not have any false pretense that I am front running or giving you bias advice. All right. There's no advice here. It's purely opinion on my own. Right. Now, so this is the place where I want you to interact with me, guys. And if you can see the chart, there's 2 charts here, chart A or chart B. I'm giving you an option, right? Between chart A and chart B, which represents the stock market, which one would you buy? Which one would you buy? If you have the link to the Slido, which is here, all right, I'm going to hold it here for a while. Please answer me whether you would buy company A, chart A, or chart B. Okay, guys? Give me an answer whether you're going to buy company A or chart B. Okay. Right. Chart A or chart B. Thank you. Thank you for your responses. Great. I'm seeing the responses come in. Why not chart B? Just to give you an indication, it's 4 to 8. That's double, you know. This is probably 160 to 230. You know, the gain is much bigger in chart B. Don't you think so, guys? Right. Thank you. I'm seeing the responses now. Great. AB. Right. Thank you for it. A lot of these guys are anonymous, so I can't address you by name. Sorry about that. I see Edward and Farid's name. Great. So obviously you guys can hear me loud and clear as well as see my slides. So that's good, right? Now, we're going to begin with the 7 criteria of what makes a multi-bagger, or in this case, 10 baggers, okay? So the feature companies we're going to talk about, and please, guys, this is not a buy or sell call. We're using them as case studies, okay? Case studies. So it will be QL Resources, Yinsen, Press Matter, SKP, Time.com, and MyEG. One bias that I have to share with you guys first. I'm a very proud and happy customer of Time. All this while I've been using Unify when I first moved into my condominium, but after using Time, there's no turning back. Okay, so I'll put it out there first. Okay, that's my buyer. I'm a very happy customer. Okay. So this is the kingdom of the 10 baggerdom. Now, this list is not exhaustive. There are many more companies in BURSA that has achieved what we call 10 baggerdom. That means their stock price has more than 10 times the IPO price. Okay. So QL, it took them 10 years to 10x from 2000 to today, right? Yeah. So it's 10 times. So 62 times since the year 2000. Okay. Another company, Yinsen, how many years did it take them to 10x? It was 3 years. QL was 10. Yinsen was 3. And they have achieved 29% since 2006. Press Metal, and I know a lot of investor or trader favorite, all right? It took them 9.5 years, and it has 110 times since its IPO. So 1 ringgit become 110 ringgit, okay? So there's a lot of perception, especially today, our political scenario, that Malaysia is a very bad place to invest. I look at the data, and I beg to differ. And this is actually a good testament to what certain companies that have certain characteristics can return to you in your investment portfolio. The problem, and the biggest problem, and I'm not ashamed to say this, is investor skills. Investor skills, because a lot of times people who lose money do not want to put in the work, do not look at the right data, do not have the skills to look at the right data, and want shortcuts. And I can tell you 95% of the market fall into that trap. And do not expect easy money whenever you invest. If you want easy money, I think there's better luck going to Genting or buying 4D, right? I think that is an easier way to achieve your, in a way, wealth if you don't want to put in the work, right? So SKP, Time.com, you guys can read. Yeah, we're going to cover these companies today, right? So what are the first criteria of part of this 7 criteria is small market capitalization. Okay, what does small market capitalization actually mean? So market capitalization is the value of the entire company. So let's just say you're a billionaire today, you have probably 100 billion. And when you want to buy a particular company, that is the price tag of the company. Is the entire company's value that is presented to you on the stock exchange. Now, for those of you who are unfamiliar with this term market capitalization, I know there's a lot of veterans out there, but bear with me because they may be newbies in the session. Market capitalization, the formula is pretty simple. It's just the price per share multiplied by the number of shares. So if you have $1 for the price per share, if you have 1 million shares, that means the market cap is 1 million. All right? When we say small, why do we need it to be small? Because it's so much easier to go from 60 million to 600 rather than 6 billion to 60 billion. Even though both 10x, but the magnitude is much difficult to achieve if you are already that size. Okay. Now, there are certain companies in the US that grow to trillion-dollar companies. I have no doubt that can happen. But in Malaysia, our population size, the business that we're in, I would say the probability is less. I wouldn't say it's impossible, but it's less. Okay. Now, how small is small? Small cap definition is a market cap of 750 million and below. Now, the definition differs among professionals, but that is the range. I think the Edge actually put this club called the Edge Billion Dollar Club, which I'll discuss later in the presentation. But I think that is somewhat of a cap of a small market cap company. All right. So before they started their journey, these 6 companies that we're going to cover all started definitely below 750 million. QL started their journey at 100, Yinsen 157. I think the smallest looks like MyEG at 69 million in 2007. All right. So the second criteria is actually this thing called a growing total addressable market. Now, how I would explain addressable market is this. Think of it as if you're going to swim in a swimming pool nearby, or you're swimming in the South China Sea, or you're swimming in the Pacific Ocean. So obviously, if you swim in the Pacific Ocean, it's dangerous to us because it's such a big ocean. But 2 listed companies, the bigger the market size, it shows the potential of growth for that particular company. So if that company is only playing in a swimming pool size market, can you imagine how fast, once it grows, how fast it will hit its limit? And that's why understanding total addressable market is actually, for me, one of the most important criteria when you invest into a company. If you're going to grow a chicken, but then you put it in a very small cage, the moment it hits a certain size, the growth will stagnate. That's the reason why understanding TAM is very important. All right. So I'll give case studies or examples of how to visualize a TAM. Shrinking TAM, stagnant TAM, and growing TAM. So 2 companies that Malaysians are very, very familiar with. The first is actually the Star newspaper. All right. I think when I was growing up, it was the default newspaper that we read. Right. You want good journalism, especially if you are a secondary school student. You also see a lot of articles that were, I think, was the Star Rage or something. I think it was a very good initiative to encourage readership among the young. But today, in today's day and age where everyone has a smartphone, everyone is so connected to the internet, how many people actually buy printed newspaper today? Now, I don't need a response from you guys, but you guys know the answer, right? That illustrates a shrinking TAM. The second TAM I like to illustrate is actually called a stagnant TAM, which is spritzer. Now, I don't think everyone is going to rush out to buy mineral water because it's the next revolution or the next electronic product that you want to get your hands on. I think even smartphones have a bigger or a non-stagnant TAM as compared to, spritzer, you see? So when we look at a TAM, we want to define what we call a growing TAM. A TAM that is probably, let's say, the Atlantic Ocean today, and then it may grow into the Pacific Ocean. So to give you an example, a case study example, is actually this company called MyEG. Now, I'm pretty sure most Malaysians would have heard of it, but for those of you who haven't heard of it, have never studied it before, one of the earlier things that they did was actually the road payment digitization services. And today they also do foreign worker permits. I'm going to focus more on the road tax payment digitization first, okay? So in 2007, there were 23 million vehicles on the road. 23 million, all right? Whether they're old, new, whatever, it's all right. 23 million that needs to renew road tax. Now, we all know that you need a valid road tax to drive on the road, right? So a typical road tax, I would put it at a median of 70 ringgit. Now, don't worry whether it's accurate or not. I know there's some guys who say, hey, but if you buy a Lamborghini, then the road tax would range from 16,000 to 10. It's okay. We average it out. How many Lamborghinis are on the road, or how many Ferraris are there on the road? So we average out, we say, let's be more on the pessimistic side, right? 70 ringgit per year for probably a car under 2 liters on average, right? And this is 2007, guys. So if we were to multiply 23 million vehicles with 70 ringgit, the amount of road tax being paid is roughly about 1.6 billion, all right? Now let's assume 10% of that goes to MyG, 10%, right? 7 ringgit. That TAM alone is 161 million as of 2007. 2007, guys, today we're in 2020, right? Today definitely is higher. And this excludes all the foreign worker permit sales, right? The revenue for MyG in 2007 was 25 million. Remember, TAM 161, revenue 25 million. Was it a monopoly? Yes, it was a monopoly business. So the TAM is 6.5 times that their existing revenue just for road tax. Don't talk about the other services that they're going to spawn. Okay. So there goes to show you a good illustration of a growing TAM. They're just at the nascent stage, the beginning stage of that growth, you see. All right. Now, some would say that, wow, John, are you giving me hindsight? Everyone can be perfect in hindsight. Was it impossible to find this number of registered vehicles in Malaysia then? I don't think so. I don't think it was very difficult to Google. Even if Google didn't exist, there were other search engines like Yahoo that you can find them. Was it impossible to find the average road tax payment? If you were not driving back then, probably you're a graduate or, you haven't gotten your license, you could probably ask your parents, hey, dad, how much you pay for road tax on average, right? And last but not least, and I think this is a very important characteristic, is that do you need to be 100% accurate on these figures? As I've proven to you, you don't. I'd rather be roughly right than accurately wrong. Don't worry about so much accuracy because no one's going to give you, no researcher in the world will be able to give you 100% certainty of the numbers. But if you get a collective basis or what we call back of envelope basis, I think it's good enough to size up the TAM, right? The third criteria is this thing called moat. Now, for those of you who are unfamiliar with the term called moat, it's actually a body of water surrounding a castle. And I think Warren Buffett, a famous investor, a lot of guys actually explain moat in relation to investing and why is it important. When you have a big TAM, the likelihood of the company growing their sales, capturing market share, it's good, it's great. It's almost like a sure win. The problem is, let's just say we use the example of social media. Social media is definitely booming, but not every social media company will do well, right? Look at guys like Friendster. Look at guys like MySpace. What happened to them, right? They came and they went. What differentiates these guys is actually the moat. You need to understand what is the durable competitive advantage of these companies to know whether they are likely to win. I'll give you an example off the top of my head, which is actually Facebook. Now, for those of you who are probably below 30s, you would look at people like me or elder who have a Facebook account that's old school, that's old generation. Everyone is on Instagram or probably TikTok, the younger generation. Now, when Instagram first started out, Mark Zuckerberg, with his vision, he was very sharp. He saw the potential of Instagram and he bought it for $1 billion. Now, in hindsight, people will say, wow, was it very expensive? No, in hindsight, at that point, people will say, wow, it's very expensive. What was the valuations he paid for it? Did he overpay? But he knew that by buying Instagram, he could conquer 2 markets. And he knew the durable competitive advantage of Instagram, right? And here he has capturing 2 demographics already, right? I only shared one kind of moat today. Actually, there are many, many moats. And we cover that in very detail in our stock investing blueprint program, okay? This cost advantage moat is something I want to share as a case study today. Now, company can price products cheaper and competitors cannot do the same. A classic example is the company that I said that I was biased to, which is time.com. So if you look at it on a cost to cost comparison basis, right, for 500 megabytes, a Unify would cost you 249 ringgit a month. I know, those guys living in landed houses, you can't get access to time. I'm so sorry. Those guys in condominiums, provided which condominium you are in, then there's no brainer virtually. For the same speed, very little latency, you get probably half the price. Okay. How does this happen? It's very simple. Time focuses a lot on what we call high-rise residential or high-rise buildings. Now, why is that an advantage as compared to Telekom Malaysia, the incumbent telecommunications company in Malaysia? Is because TM has to serve even areas that are very far-flung and has less population density. In time, I pull one fiber, the cost to pull one fiber, if I'm not mistaken, when I spoke to the IR, it costs about 100,000 per kilometer, right? Or maybe more, I'm not too sure today, to lay that fiber into a high density condo. But the moment they lay that fiber into a high density condo, there are easily thousands of units that can be the subscriber. Talk about scale. When TM actually pulls a fiber to probably a place in, let's say, Ulu Kapit in Sarawak, right? How many subscribers can actually subscribe and pay back the costs that TM incurred laying those fibers? So there goes a very big difference already. All right. Hope you guys are clear on this. The fourth criteria is actually owner, operator, and skin in the game. I love this criteria the most because if the owner owns a big portion of the company, his or her wealth is determined by how well the company does. And if you tag along with them, you're enjoying the ride of their hard work. Okay? I'll give you a case in point. People only care and when they have the most to gain to make it work. All right? And I'll show you, remember that the list of 6 companies that have made it into the 10 baggerdom? These were the ownership of the families that own these companies. Like, look at QL. More than 50% is actually owned by the Chia family. Yinsen, Lim family owns more than 30%. Press Metal, 59%. Close to 60% of the company is being owned by the Kun brothers. SKP, Gan family owns 47%. Time.com. Now, if you guys actually study a bit of Time.com history, I think we covered it in our YouTube videos a few times. I think one done by my partner MJ, and another one we talked about it when I think just 3 weeks ago. You can check those videos for a more color on the history of Time. But Time really turned around when Afzal came in, and he owns 30% of the company. Can you see the incentivization for him to turn it around? A good indication today is actually Jalil, right, who's taken over the Bijaya group, running of it, the CEO-ship. And with Tan Sri Vincent stepping back from day to day, I'm very curious to see how Jalil executes it. And he has skin in the game because he's bought some substantial shares into the company. So something to watch, right? Last but not least, Wong Tian Sun, majority owner of MyEG, owns 32%. The fifth criteria is actually high ROIC. Now, I'll describe ROIC as return on invested capital. Why is this number important? It is a measure to tell you how efficient company is managing capital, right? So, to illustrate this point, okay, once you see a higher ROIC, it is actually expressed in percentage form, right? Once you see a higher ROIC, you can quickly tell whether the environment and the management has a certain execution discipline. And when they have that execution discipline, you will see that the ROIC and the share price will actually grow in tandem over time. So if you see ROIC growing at 23% per year, for example, right, there are some peaks and troughs for the share price, but when you stretch it out over the long run, you will notice that good companies with good ROIC, their share price will grow in tandem. So ROIC growing at 23%, you will see share price growing at 23%. Okay. What is high? Now, I mentioned 23%. Now, I already set the benchmark to be so high, right? Actually, most companies, for them to grow capital at 8 to 10% is already very, very good, to be honest. Normal. It's very normal. That's why you see most ETFs, LTI index, most mutual funds will give you returns of around the same area. Don't believe me? Check out the US, even the US ETFs or Malaysian ETFs, right? They would grow anywhere between 8 to 10% on the high side, right? Anything that is double digit or 20%, to be honest, you really have to take your hats off. You really have to salute these guys. It's amazing, right? So I'm going to give you an example of ROIC for SK Press, okay? Now, for those of you who are unfamiliar, there are actually EMS, or it stands for Electronic Manufacturing Services Contractor. What they do is, you think of, okay, the world's biggest EMS is actually this guy called Foxconn. So Foxconn, they box build iPhones and Apple products for Apple. They get all these components from all the various supply chain manufacturers. They will box them, build them, package them, and they will actually provide these services for big guys like Apple. Now, SKP in the past, they were very focused on a lot of electrical appliances and other electronic appliances. And prior to 2009, they had, I can't remember the name of the client that they had, but also a very big client. They did not have Dyson as their client prior to 2009. And even then, on certain years, they managed to get a 23% return on invested capital. Very, very commendable. To be honest, if you look at EMS guys, if you look at Foxconn, their margins are ridiculously thin. You're talking about sub 10%, sometimes even sub 5% margins, net profit margins. For someone like SKP to be able to give a return on invested capital of that in a very competitive environment is really hats off to the management. Now look what happened to them when they got the Dyson contract. 2010, just look at it. You can see a very stark contrast in which Dyson clearly contributed to better efficiency, better capital management execution discipline from SKP, right? Now, the average before Dyson was 13.76. The average after Dyson was actually 29%. Can you see the similarity in the share price gain to the average ROIC of them securing the Dyson contract? Right? Can you see that similarity? Now, if you ask me, I said, John, it makes it sound so easy, but a lot of people don't put in the work. Why can't people spot this? Yeah, because a lot of people don't put in the work to crunch those numbers. It's as simple as that, right? Here's the average. I actually crunched the numbers for all, but I realized I couldn't squeeze all the companies we studied. It was more than 50, but we couldn't squeeze everything into one chart. So I'm going to show you some of the outstanding guys. Look at MyEG, guys. Return on invested capital of close to 100% for 2015. More than 100%, sorry. Not even, yeah, close. It's more than 100%. On average, look at the return on invested capital. Okay. 6 criteria. They must be selling to you when you buy them at reasonable valuations. Now, how do you value a business? The simplest valuation method is actually how many multiples are you buying a business for its earnings. Okay? So I'll give you an example of 2 coffee shops. Coffee shop A on the left, excellent decor, very hipster. Coffee shop B on the right, probably something your mom and dad or your grandparents will go to, right? So both these coffee shops are selling to you for 10 million, okay? Between coffee shop on the left or on the right, which one would you buy it for? Now, I don't know whether you guys can access Slido. If you can, please give me a response. The company on the left or the company on the right, guys? The coffee shop on the left, coffee shop on the right. Okay. if you guys are still awake and still can respond to me on Slido. Okay, seems I think you guys can't respond on Slido. Don't worry. Actually, there's a missing element here. The element is actually left, right, left, right. Great. Thank you for participating, guys. Thank you. Right, left, coffee shop, left, right. Okay. Actually, there's one very important criteria that's missing here. It's actually profit. Now, what if I told you now that the company on the coffee shop on the right profits 5 million a year and the coffee shop on the left makes a profit of 1 million a year? Now, would you change your mind now? Would you change your mind now between the beautiful one or the slightly uglier one? I guess you guys know the answer, right? You see, I want to illustrate this because most of the time when you see the stock market, right, what is the perception of the coffee shop on the left? It must be pretty, it must be nice. And in the stock market, what is pretty is something that has risen in price. The price has risen up, then we chase. Coffee shop B on the right is the stock that has probably gone down in price. Nobody's talking about it. Everybody hates it in the market. But then surely and sustainably every year it churns out 5 million profit. Okay? See the difference, guys? So what I'm trying to illustrate is that when you buy a business, don't just look at the appearances. Look at its potential profit. Because when you're buying something at 10 times valuation of its earnings versus that 2 times its valuation of its earnings, which one are you going to recoup your capital faster? Now, what I mean by recoup, you put out 10 million, every year coffee shop on the left gives you 1 million a year. So that means it takes you 10 years to get a return on your money. Coffee shop on the right, you put in 10 million, within 2 years, 5 million, you already return your invested capital. Obviously, the guy on the right makes perfect sense, right? So what is reasonable? The lower, the better. The lower, the better. If you can find a company that sells to you for 10 million and they made profit of 10 million, please do let me know too, because I want to be an investor in that company as well. Okay? When you compare it, you should compare it against the stock average. So what I'm saying is that any company you look for, Apple, and you want to compare to MyG, right? And you want to say, oh, Apple is selling for a PE of 20 or 30, but then MyG is selling for a P of 10. I'm just giving hypothetical examples. I should buy the lower one. No, that's not the way you compare. What you should compare is, if you're looking at a company like MyG, you should compare with other companies that are in the same business space and what are their peers' valuation. You cannot take a Nestle PE and compare it to, let's just say, Berjaya Auto PE. They're in 2 completely different spaces. You need to compare against its peers so you know what other people are paying for similar kind of businesses. Okay? So this is a very interesting chart. I think among all the charts that I'm going to show you, this is one of the most important that you should pay attention to. So the blue stepped area, right, is the average PE of the KLCI index. Okay? The average, I repeat, the average PE. So in 2001, the average PE of the top 30 KLCI index companies was 20. So as you can see, the years when it went down, there were years when it went up. Now, why I want to benchmark this is I want to show you companies that were great, doing well, but selling below the average PE. So as you can see QL here, I want you to notice, forget about the green bars first, forget about MyG first, right? I want you to look at the red bars first. Look at the red bars, guys. Here was this QL resources, just diligently making sure we can buy eggs, making sure there's enough fish meal, making sure there's palm oil, right? Here they were diligently just churning out profit year on year, but yet selling below the average KLCI index, right? And when you see that, right, you should be able to seize that chance to say, hey, this company is growing every year, but selling below the average valuation. right? Shouldn't it jump up at you? Right? Look at MyAG. Now, MyAG is interesting is because I wanted to point this out for MyAG is because what happened in 2019, guys? What happened in 2019? Or even 2018 for that matter? We had a change of government, right? And when that change of government happened, there was a lot of bad perception about MyAG. Oh, they're going to lose the contract, they're going to lose their road tax division. And yeah, here you go. Look at it. Was it so battered down? Yes, it was. Now, you as a value investor, right? I'm not saying that you should. If your choice is a value investor, you should start swimming and hunting when there's blood in the ocean. Sorry, I have to use a very gory example, but you should be very, very greedy when the market is red. And you should be very, very wary when the market is green. So today the market is red. Open your eyes, guys. Do the work. Crunch those numbers. You will find very interesting finds. Trust me. Okay. So last but not least is the PE growth. So the moment a company is discovered, right, suddenly everyone wants to pay a premium for it. Definitely it's great to buy it before the premium increase, but if you can spot it even after the premium has increased, right, you are still may not be too late to the party. Okay? I'll show you an example. Remember QL I talked about? This was the average, what do you call it? KLCI PEs. And here we were just quietly humming along. And then in 2015, someone at the Edge featured them under the Edge $1 billion ringgit club. What happened? The next year, they opened Family Mart. What happened after that? Look at the PE jump, guys. Everyone says, oh, QL is a great company. But when everyone else was not looking at it, this is what happened. Now, Taufik, don't worry. I saw your question. I'm going to answer that later. I know the moderator just helped me keep my attention and putting it. Don't worry, I'll answer that. Please ask me at the Q&A session. It's a very good question, by the way, Taufik. Okay. So this is what happens when it's suddenly discovered. The best part is you want to buy when it's undiscovered. And that's where the work comes in, guys. Okay. So this was the PE growth before and after each company. 10 to 55. There's not much change to Inson, hint. Okay. P Metal 10 to 34, SKP 9 to 18. Usually it's double or triple. Okay. Time.com, okay, it increased but not as a substantial double. And MyG 20 to 31. All right. So the conclusion is this, guys. The signs were actually very clear. If you do enough digging, the information for you to take action is all available. You just need to know how to dig, to possess the skills to know how to dig. Out of the 7 criteria, 5 was actually very easy to find. You just need annual report numbers, right? The struggle would be when you come to TAM and modes, and that's where you need to upskill. I mean, it took me years. Even today, I'm still learning how to evaluate TAM and modes better, actually. And this is where the thinking is required, because no one can give you an answer. You go to one research firm or you come up with your own calculation versus another guy, it will differ greatly sometimes. But here's what's interesting. You don't need to reach a consensus that you get an accurate number to give you a picture of the TAM and the mode, right? So the biggest challenge of them all is this. You need to be patient and emotional control. Now, I've had students come up to me and says, hey, John, your method very slow. MJ, your method very slow. I want to make money tomorrow. Yeah, if you want to make that 10, 20%, go in the morning and then afternoon, wow, I made 5% because volume is big. I went in $1 million and 5% is already 50K, kind of thing. Yeah, whatever makes you happy, whatever that you feel that it's suits your style. But the style that I'm showcasing to you is that I'm looking for baggers. I'm not looking for the 10, 20% guys. I'm looking for the 3x, 5x, or even 10x's, $1 to $10 kind of things. And I'll just be patient and wait. Do my work, be patient and wait. Okay? The problem is this. There's a lot of noise. There's a lot of market commentary. I'm pretty sure even today, if I'm not mistaken, Afin or Am they're also doing their market day. And I know a lot of retail investors. They love to attend this market outlook. It's great that you attend. It's great that you look at economic data. But what are you guys doing on your own? Are you crunching the numbers on your own to be able to give you that conviction? Because if you're not, a lot of these market opinions and commentary, the moment one day an analyst says that the target price is $6, and then 3 months later changes the target price to $4, and you've not done the work, that's where you get easily shaken, guys. And that's where it will cause you to sell. That's why the struggle for most investors is they haven't put in that work to give that kind of confidence. And ironically, numbers only make up 25% of your investing decision. I repeat that again. I know a lot of people already struggle to look at numbers and look at accounting, right? And luckily, I love numbers. I'm an engineer by training, but I love numbers. I realized that more and more, I used to be so hung up in numbers, but now 75% of the time I spend is actually thinking about the qualitative aspects of the company. It's not easy, and it's constantly learning for me, right? But I think when you have that skill to evaluate qualities of businesses, that's where you really become the 1% of investors in the world, all right? You don't need to buy at the right time as well. You don't need to be absolutely perfect on your timing. Even if you bought SKP after they got the Dyson contract, not before, right? You still made 26 times your money, 26 times. I don't know about you, but I'm very happy with even 20 times or even 10 times my money. But let's just say almost everybody is not that good. Let's just say in 2009, you're still skeptical and you wanted to see. Right after Dyson got that contract, you said, don't worry, first year, let's see how they execute first. You bought it 3 years later, okay, in 2011, until today, your gain is still 11 times, guys. Now, I don't know about you, if you're happy playing in a 5-10% space, go right ahead. There's no right or wrong in investing as long as you make money and sustainably. But if you want to look for those multiple bagger gains, this is what insights I can share with you, okay? Not all criteria must be met to be successful. Like, for example, Yinsen and Time.com, ROIC was not above 8%. And last but not least, the key criteria is really patience, guys. You don't get a multi-bagger within 6 months or 3 months. Sometimes you don't even get it within 3 years. But if you can hold past that 5 years, right, guys, the likelihood of you securing 100% gain on good companies, it's almost close to 100%. Okay? So are you looking at the right number? Remember the earlier part I asked you to look at chart A and chart B, right? Okay. Here's the last conclusion for you. And I found this very interesting because they said, hey, John, you're all giving us hindsight. There's, timing to the market is very, very important. I'll give you a case study to debunk that myth, whether timing is superbly important. I don't believe so. I'll show you this example. Okay. So this is actually Vitrox. Okay. This was the share price from Q1 2015 to Q2 2017, right before the jump. And I purposely put this period because I wanted to show you guys a flat line, right? Roughly a flat line, 160 to probably 230, right? So it's not much difference, a change of probably 80 cents, okay? But was that the right number to be looking at or not? Now, this is chart B. Chart B was actually the earnings per share of Vitrox. Now, as you can see, the blue line, look at the revenue, guys. Is the slope going upwards or downwards? Very clear, right? Now you compare this, this is the share price chart. This is the revenue and net profit chart. Okay. So if you had done the data, right, it would have jumped to you like a gun. It was so clear, right? And the market actually waited for you. 2 years. 2 years, guys. Okay. So look at that. If you had a good 2 years before the share price jump, if you just look at the growth of revenue and the growth of earnings, right, you would have picked it up, right? It's so side, but most people, what do they focus on? They focus on the price chart. They try to draw some lines and try to, technical analysis can help you understand market psychology, but at the end of the day, you're buying a company that has a business. And these are the business numbers that you should be looking at. So sorry, in a way I tricked you guys, but it was actually chart A and chart B is the same thing. You're both buying the same thing, which is VTROX, but then what were the numbers you were looking at? If you were looking at chart B and you were looking at the revenue numbers and the profit numbers, this will help strengthen your confidence to hold this company. It was a multi-bagger after that. You guys know that, right? Okay. So this was a flat line. Okay. So I hope you guys learned something today. I hope that my sharing helped you become a better investor. We do share weekly, at least twice a week on our YouTube channel. We do post Facebook and Instagram posts to help the community invest better. So those are our social media handles you can find out. And we do have a free stock masterclass coming up. Next week. Next week, by the way. So scan that QR code and register. I'm going to open the floor now to questions. So Mr. Moderator or Miss Moderator, thank you for hosting. I'm happy to take in questions for the next 10 minutes, I guess. 10 to 12, 15. 10 to 15 minutes to be able to, answer your burning questions. So Jenny asks, will there be a situation you found a potential stock but it's rarely been noticed by the market and hence the stock price didn't reflect? Yeah, you have to do the work. You have to put in the work. You have to crunch the numbers. You don't focus so much on the stock price. Focus on the business numbers first. Put it on your watch list. And that will give you the conviction to buy before it goes, right? Is that the only question? Kopitiam, I'm looking back at some of the responses. Doesn't seem to be a lot of questions. It's good. I can end the session earlier. Does average free cash flow against market capitalization gives you a better hint on valuation? Yes, it does. Actually, most of the time, I focus on operating cash flow rather than free cash flow. Yeah, I focus on operating cash flow, then free cash flow. Obviously, it's a favorite number by Buffett and a lot of great investors. But I'm just giving you guys the concept that return on investment. If a good company, right, you will know that net profit and free cash flow over the long run, it will match. Now, I find this a lot. I know you guys will find this a lot hard to believe, but great companies over the long run, net profit and free cash flow will meet each other actually. Yes. So topic and question, and I wanted to answer this. For PE valuations, does the number of shares outstanding have an impact on valuation? The short answer is no, actually. The short answer is no, because if you take market cap against net profit, which is also another way of finding PE, you actually discount the need to have the number of shares. So a lot of people focus so much on earnings per share divided by price per share, right? Use the better formula, which is market cap divided against the net profit, total net profit of the company. Then the number of shares doesn't really matter. That's the PE of the company. And as an investor, that's the number you should be looking at. Don't think on per share basis. You always think on market cap basis. That's a key. It took me 2 years to really understand this concept. I'm hoping that you guys don't repeat the same mistake I did. Okay. I think I've answered the average free cash flow. I don't give stock picks. I think that's something that you guys have to figure out yourself, right? I'm scrolling down to see what other questions are there. Okay, yes. How do you determine the price, the time to sell a stock? Well, if the owners aren't exiting, I'm not exiting as well. Remember, I mentioned this part about ownership of the company, skin in the game. If the Kun family, if the Gan family are not selling and 90% of their net worth is tied to the company, right? Why should you and I be selling? Unless they're exiting, then maybe it's a good consideration. Unless they are overvalued, meaning you reach a point where you've already made 50 baggers and you say, hey, yeah, I want to find the next bagger. There's no harm selling half, or no harm selling 25%, or no harm selling 80% and keep the remaining 20%. I think today, this morning, when I was preparing for this, I was reading, my usual morning routine. I always read, I catch up a lot on reading. And I found this article very interesting because it talked about Buffett and he was just announcing his quarterly portfolios. He regretted selling Apple. Charlie Munger told him not to sell a portion of Apple, and he sold a portion of Apple. if he didn't sell, he would have made an additional 26 billion or something. Yeah. So if it's a good company, owner still in it, business stays the same, story stays the same, I wouldn't be selling. Right? So there's a question from Anonymous. What are the things that are most important to look at? I'm a beginner. What are the most important things? Upskill. Learn how to read financial statements. I never came from an accountancy background. I've never been into investment banking. I don't have a CFA charter to my name. But I love understanding businesses first. Once you understand businesses, and once you understand how to understand businesses, which is reading financial statements, then the numbers will make sense. That's why you become a better investor. Okay? When the revenue is upward trending but profit doesn't follow the same percentage, does that mean the profit margin is going down? What is your call on this? Great question. We've seen companies where, I'll give you the other extreme example first. Revenue is flat, but net profit margins are increasing. Fantastic company. You know that there's only two reasons why it goes up. Either they've increased, the quantity remains stagnant, okay, but selling price has increased, or they have managed to reduce costs of their particular services or particular raw materials cost. That's why margins is increasing. For the scenario that you gave where revenue is growing, but net profit is going down, I will be wary because of a few things. Now, I think in our YouTube video, probably 3 weeks ago, we talked about server dynamic. Revenue is just through the roof, right? But then you see net profit going down. The first thing I would check is the receivables. Are they actually just growing sales because of sales but not collecting their money? That's a big red flag to me that I will check. Because revenue is one of the easiest numbers to fake, actually. Second easiest to fake is actually net profit. So don't just rely on one number, but it's a great question because it gets you thinking about how financial reporting is about multiple figures that you have to piece together, string together. Okay, great question. So, hi John, do you recommend 2 books by Peter Lynch for a beginner? What are the titles, Cindy? Very easy, just Google Peter Lynch books. There's only 3 books written by him. The first one is called One Up on Wall Street. The second is called Beating the Street. I repeat, highly recommend you to read those 2 books. A lot of great investors started their journey by reading Peter Lynch's book, actually. Great. Monish Prabhai was one of them, okay? Let me see. If I miss any questions, let me go up or down. So the next question is, do I look at the book value of a stock? Yes and no. So when we look at certain ratios, you must really understand the business. Now, I'll give you an example why book value doesn't work all the time. A good example is Genting. Okay, Genting, they had this thing called Star Cruises as part of the business. So if you look at book value, when they bought these cruise ships, let's just assume that they are 500 million per ship, okay? And when you bought 4 of these ships on the books, it would have been 2 billion. When times are great, everyone is taking a cruise. The book value seems reasonable. The moment a COVID-19 hit them, do you think they'll be able to sell their ships for 500 million each? Or even 400 million each? That's where book value doesn't really make sense already. That's where understanding of a business and understanding what is in the book value, the asset quality within that book value, to be able to give you a glimpse of whether this is a good metrics to use. So don't apply it blindly. Apply it in the context of the industry and the business. Okay? Any good publications, further learning from this? Tons, guys. As I mentioned, worldwideweb.firl.co, FIRL.co. We are revamping the website. I think give it another 2 weeks. We will have a list of all the books that I find great. I can't list them all here. The website would show you at least 20 books that we highly recommend for you to start your journey. Okay, so head on to worldwideweb.firl.co. You'll be able to check our book list there. Okay. Any good tips? Hi, John. Any good tips to train myself to be patient enough after pick a good value stock for a few years despite the noises from the market? Yes. Do all other things except look at the stock screener and the stock price. So I give you an example. So I manage my own family fund. My parents, my sister, myself, and my wife. All separate portfolios. The laziest one I've managed is actually both my parents. I hardly look at them. And in my parents' portfolio, there have been at least 3 stocks that are multi-baggers already. 3 stocks. And why I use my parents' portfolio as an example is because I log into them probably once every 6 months. I repeat, once every 6 months, just to tidy up the dividends. The other times I just leave it. And there was a period of time when I was so busy in my career when I was working for Shell, I did not log into the account for 2 years. Guess what? The savings account in which the dividends are deposited into in your savings account is a separate account. It became dormant. It became dormant that I had to get my parents to go to the bank to reactivate it. So that's a hint to you on how you can be patient. Do the work upfront. Find great companies. Read up about the company's progress rather than look at the share price. If you can do that well and you just look at that rather than looking at share price, right? I tell you, you will increase your patience by a lot more. Okay. Okay, I have to scroll down again to look at the questions. Great questions, guys. By the way, keep them coming. Stagnant share price while net profit is growing could be a sign of PE overvaluation. How do we differentiate between overvaluation or good companies to load more? Understand the TAM, understand the moat. And there's a lot you can, there's this company that I've been studying for a long time. And I thought I knew the company after studying it for 3 months, right? I only realized after attending my 3rd AGM with them that I really understood the company. So once you understand a company, a few things will happen to you. You will also understand the industry. And when you understand the industry, you understand the moat better. You understand the TAM better. That's how you should be looking at valuations. Rather than just figuring out the PE, you need to figure out the TAM. Is it something stagnant today that while net profit is growing, but PE is like overvalued? You want to understand how big this company can grow. I invest in the US. I have a US portfolio, and one of the companies I regret not buying was Netflix. I'm a fervent subscriber, and yet what put me off was because the PE. It was too high. It was never at a PE that was cheap for me, and I missed out on a 120 bagger, actually a 150 bagger, right? So just to showcase to you that don't be hard out on just one number, okay? Let me scroll down again to look at the questions. We've got another 2 minutes, I guess, 1 minute, okay? Oh, do you mind? I think Chu asked a very good question. Do you mind sharing your most painful experience in investing? Do you learn what I learned from there? The most painful experience I had was losing 25,000 ringgit when I didn't know what I was doing and I was looking at charts. And I went into margins. Yeah. So I bought this 3 company. I don't mind sharing because I've publicly mentioned them before. I bought this company called K&M, Brahmins, and this company called Ralco. I didn't know how to read an annual report. I was just learning how to read charts. And I followed a lot of tips in the market. So things like, what was it? Buy on rumor, sell on news. I'm pretty sure a lot of you have heard this, right? And what happened is I was so confident, I went in margins. And instead of buying just with the money I had, I bought 3 times more than the money I had. And 25,000 ringgit when I was 25 years old, guys. And from that moment onwards, for me, when I look at anything that can help improve my skills, right, I would gladly pay for it. Because that 25,000 ringgit tuition fee, I gladly pay for anyone or any system that can help me be a better investor. I'm a ferocious reader. I'm a ferocious podcast listener. And when I listen, right, and I listen to fund managers in the US and in these hedge fund guys, my goodness, the mental models that they have compared to what we as investors have in Malaysia, or even fund managers that we have in Malaysia, there's so much more to learn. I'm constantly a student in the market. And why it relates to the painful investing is that you constantly become better. So when I first started understanding how to do basics of value investing, I look at all these basic numbers. But as more and more I grew, right, I realized that numbers only make up only a fraction of that. And my plea to you is never stop improving, never stop learning. Okay? Moderator, let me know in the chat whether I have another, how much time left to answer questions. I can cut it off anytime, all right? How can we identify good companies when they're low PE? Because companies I'm studying have growing net profit, but high PE as well. Now, don't focus so much on PE again. Like I said, not to say that PE is not important, but make sure you understand, is the PE actually justified? Never pay for overvaluations. Can you imagine paying for a company that is 100 PE, but the earnings is actually only growing 5 or 10% a year? So if you do the math, right, rule of 72, 5 or 10% a year, let's say 10% a year, you're doubling your profit every 10 years, you know. So if you're paying of 100, that means only after 10 years, the PE becomes 50. So that's the mental model I use. If they're growing earnings at 50% a year or 70% a year, that means every 1 year they double the net profit. So if they double the net profit every 1 year at a PE of 100, next year it will be 50 already. The year after that will be 25. That's the mental model I use. Okay, hopefully with this short answer, yeah. If you found you have a good bagger stock when you do decide to sell it off or hold forever, I think I've answered that earlier. If the owner is not leaving, why should I? Is there a proper framework to start investing and manage your portfolio? Yes, there is. Head out to our YouTube channel or fira.co. We, over the years, MJ and myself, I've shared my experience and taught close to more than 5,000 students over a very short period of teaching and sharing over the past six years. And one of the things that I found a lot of investors lack is that they have so much of information. Today with Google and YouTube, there's so much information, so much opinion. The thing lacking that they have is actually a system. And what we found that even though we're constantly learning and constantly improving ourselves, is we set down a very systematic way of how to evaluate and how to manage your portfolio. And I think that's what a lot of courses out there actually lack, because one, they may be very good at teaching, but do they manage money? I think that's the question that you should ask yourself. Do they manage their own money? Okay. Last question, I think. Newbie here, where do I get apps for paper trade? I would discourage you from paper trade. I know a lot of times people out there will tell you, hey, you should do paper trading, for starting all this kind. I would rather you put in real money that you can lose rather than paper trade, because the emotional response when you paper trade versus that of real money will be very, very different. But don't start out with money that you can't lose. Start out with money you can lose, $1,000, 2,000 ringgit, right? But make sure you upskill yourself first. Because if you don't upskill yourself, it's like going on the road and driving without a license, or jumping in the pool and you don't know how to swim without a life jacket. So I really hope you guys, the key takeaway is upskill yourself first before you start doing this paper trading or whatever. Okay? I think I've answered all the questions. I think moderator, thank you for moderating and putting forth the interesting questions. If there's no other questions, as I said again, if you guys want to learn more, our social media handles are there. There's a free class next week. We even talk about companies like Microsoft. So I'll see you guys in the next session. Happy investing and have a great weekend.
Good afternoon, ladies and gentlemen. Welcome to the Power of Leverage Trading Crude Palm Oil Futures. I'm John Q. I'm representing RHB Futures, RHB Investment Bank Futures, to present to you the topic of palm oil futures and how the retailers like us, the traders, can trade with it. And this is a disclaimer. I will pause here for 10 seconds for you. And looking at today's agendas, basically we have 2 sessions for today, and we have 6 agendas. The first topics we'll cover about why the industry trading palm oil futures and the fundamental about trading the palm oil futures. A contrast spec, like why BURSA futures are so important, BURSA palm oil futures so important for the market, for the industry. And the third part will come to why the trading strategies of FCPO trading. So this will come from the technical indicators perspective. This is my experience and also my passion to share to you, and how these systematic trading plans will work in the intraday trading basis. So definitely stay tuned. Okay, I make sure these topics will be comprehensive and it will be fruitful to you. So the first agenda today is why we trade palm oil futures. So by looking at the GDP agriculture sector in Malaysia, this is the 2019 data. Malaysia has 7.1% GDP contributed by agriculture sectors in 2019. So it's roughly 100 billion ringgit. So in that 100 billion ringgit, 37.7% come from the palm oil industry. So you can imagine how big is this industry in Malaysia, and most likely it will continue to grow. And not only that, looking at the palm oil trees itself, when we compare to its substitute like the sunflower seed oil, soybean oil, rapeseed oil, basically the palm oil tree is the most productive oil by acre of land. So average yield of 4 tons of oil per year is actually 5 and 10 times more productive than the other substitute. This is a reason palm oil is so famous in the Tropicana countries like us and also like Indonesia, because these are the countries and the seasons that we can plant palm oil trees. So palm oil usage can widely seen in our daily life. So for example, like foods, frying. So the edible oil use palm oil to cook, to fry things. Of course, additive, vitamin E's, sweeteners, everything will include palm oil as additive. And also the soap, the shower gel you're using, all will be included as palm oil as well. So palm oil is widely used in the industry and in our daily life. That's the reason why palm oil BURSA futures is so famous. It's basically the world benchmark price for palm oil in global. So palm oil futures, what is a futures? Palm oil futures basically is a standardized contract written by the exchange, and the underlying instrument is crude palm oil itself. And like all the futures contract in the market, all contracts have a standardized specification. Palm oil futures contract size is 25 metric tons. So if you buy one futures contract in the BURSA futures market, you're basically holding a 25 metric tons equivalence value of products and asset. It also means you are exposing 25 metric tons of palm oil value in the market. And the minimum price fluctuation is 1 ringgit per ton. Okay, this is very straightforward. And in futures contract, basically we are trading different contract months. So palm oil futures, the listing months start from the spot month, July, until the next 36 months will be available for the traders to trade. And usually the traders like us will trade the most active month will be the third month contract. So for now, it will be the FCPO September month. The trading hours is from 10:30 to 12:30, the first session. And the second session will be 2:30 to 6 o'clock. And it will include the most important market like European markets. And the final trading days of this contract, usually it will be on 15th of the month. It depends on is a business day or it will be a holiday. So I will show you a video here. Okay, this is a 1 minute of 50 seconds video. And this video is brought to you by BURSA Malaysia. Then in this video, you basically have a more in-depth understanding of why palm oil futures and why people trade palm oil futures. Okay, enjoy.
Think palm oil is only used for cooking and baking? Think again. BURSA Malaysia. Think palm oil is only used for cooking and baking? Think again. BURSA Malaysia Derivatives operates the most liquid and successful crude palm oil futures contract in the world that is traded by many. With an impressive track record of over 30 years, BURSA Malaysia Derivatives FCPO price has become the reference point for market players in the edible oils and fats industry. Ananda observes that the increase in the price of crude oil has always been reflected in the rise of the crude palm oil price. He foresees the crude oil price rising. To make profit out of the bullish market, he can use FCPO contract in the following manner. He can also use the same strategy for any other indications of a bullish market. How can you benefit from trading FCPO? Traders can use FCPO to gain leveraged exposure to movements in crude palm oil prices. Plantation companies, refineries, exporters, and millers can use FCPO to manage risk and hedge against the risk of unfavorable price movement in FCPO in the physical market. FCPO is traded electronically on CME Globex, a global electronic trading platform that allows individual and professional traders anywhere around the world to access all of BURSA Malaysia Derivatives products. Trade FCPO today. Contact a licensed futures broker or visit www.bursamalaysia.com.
So like what the video illustrates, palm oil futures is very important in the industry for hedging purpose and for trading purpose. So the hedgers will be the plantation house and the refineries, all the users of palm oil industry or factories, companies, and businesses. So for us, we basically focus on trading the palm oil futures. We will take advantage of the swing of the palm oil prices and how to do that. basically we will go on the fundamentals perspective and or the technical perspective. So the first part I will talk about the fundamental basis of trading CPO. So even you are a technical person, you must have brief understanding about the fundamental of palm oil. So you're able to read the info, the news, and the data. So now we move on to the second part. Okay, so let's imagine. So like all the things that we learn, we need to know the source of the water. So the water usually comes from the mountains. It's just like palm oil. Palm oil basically come from the trees itself. So along the highway, usually you will see a lot of palm oil trees, just like this. So the trees is basically, they will grow this fresh fruit bunch. So we call it FFB. So these fruits will be harvested by labor. So it also means labor is one of the key factors of the palm oil industry. So maybe there's no machinery, AI yet to help this process. So usually it's still very labor intensive. Then the laborers will carry the fruits to the transportation, and this will be transported to the refineries mill. And just like this, you see lorries of palm oils go to the mills, then they crush the mills, and what you see will be the products of crude palm oil. So the crude palm oil is like red in color on the bottom left. This is basically the crude palm oil. So the palm oil futures is basically trading this crude palm oil. And this simple process, all the businesses, they basically expose themselves to the price risk. Price is sentimental, price is swinging. Okay, if the price is not favorable to the business, then definitely they will have a problem in their financial book. Okay, and palm oil usually will store in the pots with a storage tank, then they were ready to export to countries. So the 4 countries here are the major exporters of palm oil currently from Malaysia. So the first one is India, then followed by China, Pakistan, and the European Union. Once you have a basic understanding of the supply chain and how the fruits come from the trees and go to export to the countries, so basically this is the first line of fundamental you will know. So by knowing all the infos, it's basically like building a binomial trees of fundamental knowledge. So what happens in our exporter countries like India that increase their export tax, import tax, things like that, they try to control their food price, that will affect our sentiment in palm oil. So whatever happened in China, like they are in recovery, so they increase their buying of our palm oil. So every single things come from that understanding of the supply chain. So with that supply chain in mind, so every time you read the info, you basically can link back to what will happen in the factors. So in Malaysia, the palm oil industry, labor is the key factor. Yeah, so labor been a big topics in the past few years. So for traders, how we can track all these fundamentals? We by tracking the data. So there will be 2 categories of data available for the traders: the demand and the supply data. So the demand data we call export data. So it will be released by Intertek, the MSPEC, and the SGX. They basically are the surveyor, and they will be announced during every 5th calendar of the month. So every 5 days, you will receive export data, and their data are quite accurate. They have reputation in the market. So basically, the price is sensitive to all these data if the data is out of the expectation. So for the production part, the MPOA, the Malaysia Palm Oil Association, they will announce the data twice a month. So on 20th and also on the end of the month. So usually they won't announce at that day itself. They will announce a few days later. And of course, the Southern Peninsula Palm Oil data, it will cover the production data in the Southern Peninsula part. This will release every 5th calendar of the month. So you roughly can imagine that every 5th of the month, we will have new data about what's happening in the physical market that will affect the futures price. And we have this official CPO data from Malaysia Palm Oil Board. This will announce at every 10 afternoon of the calendar month. So in this data, we will have productions data, inventory, and the export data. And the inventory data is a key of the palm oil industry. So if this inventory rise, it means this market have palm oil surplus. So it varies to the price. but sometimes the price won't move because it will be already factored in. So how it factor in? It basically comes from the survey data. Before the MPOB data release, in the first week of every month, we will have Bloomberg writers survey data. Usually this data provide the range of the MPOB data. So usually whatever data coming, the price already factored in. And looking at the fundamental, Malaysia have seasonal patterns in their weather. So we have monsoon season, we have rainy season and dry season throughout the month. Okay, so this weather will affect every agricultural crop, especially palm oil. So this is basically the palm oil productions data from 2014 until 2021, almost like 6-7 years data. You can see there's a consistent pattern. There will be some months up, there will be some months decrease. So during the production increase month, usually it will start from March onwards until from August to November. So the high peak of productions usually fall between these months. Okay, so you can imagine there will be some bearish sentiment emerging during these months if you check back the historical price movement. Then we have production decrease period. Usually this will be after the high peak of the month. Then it will fall until the next year, February. So usually it will be slightly bullish in this month. So we have a brief understanding about the fundamental of palm oil futures. This will help you to digest data for your trading. And now we move on to the technical parts. So today the trading strategies will focus on the intraday FCPO. So I will give you an angle of a systematic trading plan. So it's unlike the conventional way of trading, just plot in moving average, MACD, things like that. But what we are doing here today is basically use all our info we had today and make it the workable plan. And I will show you how to do it and basically just give you a brief idea. Not necessarily you need to follow this trading idea. You can use the same basis to develop a trading strategies according to a mathematics sense. So it's just like a lot of methods in the market. So trading's idea basically come from, could be technicals, could be fundamentals, people trading the seasonal of commodity cycle. It could be mathematics, it could be quantitative, and because of algorithm power, so all these scientific methods, it could be used in the market for trading. Once we have method, we will need to write it into a trading plan with a proper risk management. So a trading plan basically tells us how to buy and how to sell using our methods. Yeah. Then we will test this idea. So whatever ideas we have, there's no proof yet. We need to test it. So how to test it? The most convenient way is to use the historical data that we have. Looking at the chart, plot your RSI, plot your moving average, and see what happens. Okay, these are the good way. So the backtesting today, the trading strategies I backtest today is basically using Excel to do it. So I will show you some result from the Excel spreadsheet. Then I will tell you how to use it in a practical manner. Then of course, once we backtest it, we basically have a performance result of this particular idea. Not all ideas we should use for trading, but in every process, even we don't achieve our objective, but we definitely learn something. So this process, maybe you go 10 times, 20 times, every time you definitely learn something. So here, it tells us the trading strategies, strengths and weaknesses. We should focus on the strengths and we will try to overcome the weaknesses here. So there are maybe some indicators, technical indicators, not very good. So we will just abandon here, then we'll move on to test the other again. So if we have a very satisfied results and you achieve our objective, then basically we will continue to do some paper trading before we go live. So the paper trading could be 1 month and 2 months just to test that our trading plan have covered most of the market scenario. Okay, so here comes to the trading strategies idea. So I give you 2 scenarios here, okay? So it's like we're playing 2 games today. So the first scenario is we have a winning ratio of 50% trading plan, okay? So every time you win, it's just like we're flipping a coin. When you get hit, okay, maybe you bet hit, you win 100. If every time you lost 100. So after 100 trades, how profitable will be this scenario 1. Then the second scenarios work a slightly different manner. The trading plan giving you a winning ratio of 40%. So every time you win 200. Every time you lost 100. So if you do some brief calculations, most likely everyone will go for the scenario 2. You will do a game plan 2, but you may struggles about the winning ratio. Maybe it's too low for you. Okay, the scenario 1 is something is just like playing a casino game. Okay, but the outcome is important. As a trader, we always focus on the outcome. In the game 1, okay, maybe it's a casino game, but we basically not profitable in the longer term. And we also have opportunity costs incur in using the game plan 1, because you have commission costs, you have time costs, you have mentality, psychology costs of trading these 100 trades using this method. So for the scenario 2 is better off. Okay, even the winning ratio is lower than 50%, but it's 40 trades. It will brought us 8,000 ringgit profit. Then the 60% of the time it lost from 100 trades, equivalent to 6,000 losses. So you have a net gain of 2,000 by just using this idea. And this idea is foolproof. It means in any time in your life, okay, every time you understand this idea. So how to implement this idea in trading? So I started with this idea, then I bring a spreadsheet, okay, I build a spreadsheet and to test this idea, how to implement it in trading. I want to see the result, is it positive or not? Okay, so let's move on. So initially, the strategy is basically focused on exit. So the exit is important than entry. So how to exit with a risk reward of 2. Like every time we will gain 2 ringgit by losing 1 ringgit. So every time we lost 1 ringgit, we'll be compensated by 2 ringgit. How to do that? Okay, there will be a few ways. First is fixed rate. Let's say every day 10:30 the market open, then you go long. Okay, once you long, 10 point to cut loss, 20 point to take profit. Okay, that will give you a risk reward of 2. Yeah, things like that. Or 20 point to cut loss, 40 point to take profit. That will also give you a risk reward of 2. But it doesn't mean the market have every day will give you 20 points. So we need another way to measure the market range. Okay, the first way to measure the market range is by comparing the day high and the day low. So what happens is today range. But I still feel this is not very good, because the volatility itself from the market, it speaks by carrying volatility. It means the previous day sentiment will be carried. So I will use these indicators called average true range to do that. Okay, so how to do that? Average true range basically gives us an average range of the past 14 bars in the market. So for technical analysis people, you may know average true range for some time, you may know how to use it. So it's very easy. Let's say every time I enter the market, so one average true range, let's say it will be 5 points, then my cut loss point will be 5 points away from my entry point. Then my take profit point will be 10 points, 2 times 5 from my entry point. Okay, that's it. So I just want to test this simple idea on exit. Every time I just enter random, it's like we don't know what will happen in the market. We just enter random, but we exit it with a logic of risk reward equal to 2. Then I need a simple buy sell logic. Okay, so the buy sell logic basically is just very simple. It's just like every 4 bar, the highest point, if the 5th bar higher than the 4 bar highest price, I will go long. Okay, if short, if the 4 bar lowest point, the 5th bar go lower than the 4 bar lowest point, I will go short. Okay, maybe you will be confusing, but doesn't matter. I'll give you a sample here. Okay, so for example, we look at this chart here. This is a FCPO 50 minutes chart. So you look at here, we have a sell signal here. So how to define this sell signal? So the dark bar basically was the 5th bar, and the 5th bar basically lower than the previous 4 bar low here. So the blue color price there, we will initiate a sell stop there. Okay, so immediately the strategies will look at the average true range. So the indicators down there is the average true range is like 6 points. So 6 points away from where I shorted, it will be my cut loss point, and 12 point will be the point I take profit. Okay, so the spreadsheet built on this manner. Okay, I spend some time to code it to understand how the Excel formulas work, then this is how it tests for me. So I will just pump in my data, then I will make sure all the signals about this 4-bar high buy, 4-bar low sell is identified by the Excel itself, then it will give me a result. Yeah. So these are the samples of how the strategies work. Okay, it's just like random things, but we actually with logic. Okay. So by the way, average true range is not something new. Okay, it's older than me, developed by James Wilder in 1978. Okay, it's an indicator measure volatility, and is very workable for Malaysian market because it included the gaps. So the average true range, we are talking about true range. So the true range basically is using the current and previous closing bar and compared to the current high price and the low price. So you will pick up the highest range to compute the calculation. So the 14 of the summation of true range, 14 true range, and you average it by 14, you will get the average true range of the past 14 bar. And this is how it works. So you can see basically when the market moves on sideways on the right hand side of the price data, it's more choppy than the previous one. You see the average true range going down, declining. It means the volatility of the market declining. Okay, so when I go to testing with my Excel, these are the data that I use. So for F-Serial 15 minutes, I use a 4 years data from 2013 September to 2017 October. So the trading period will be 10:45 to 5:45 because this is intraday trading strategies. Whatever positions, it won't carry overnight. So before 5:45, any position, it will be closed. And the source of data is come from telecodes. Okay, not too bad. The data relatively cleaner than the other data. So I'm using it for testing. So you'll be trading only one lot. There won't be any position sizing or increasing lot size when you make profit. Every signal you will follow by just one lot. And this is a trading plan, very straightforward. The buy rules is every 4-bar high, we will buy at the high price. Every 4-bar low, we will sell at the lowest price. Then the exit will be stop loss, we follow 1 ATL from the entry, and take profit will follow 2 ATL from the entry. Okay, just that straightforward. And this is the result. Okay, this is the result summarized from the 4 years data. And on the right hand side is the result. Let me go through one by one with you. So the total P&L is 5,700 points. Okay, this is tick size. Okay, so like what we learned earlier in the contract spec, in the Malaysia palm oil market, every point you earn is equivalent to 25 metric tons. So the contract size of the futures contract is 25. Every point you earn, you will need to times 25. It will give you the equivalent amount of the P&L. So 5,700 points here times 25 is equivalent to 125 to 130,000. And within the 4 years testing period, there were 2,600 trades traded. And the winning ratio is 44%. Okay, only 44%, but it's profitable. Okay, because the logic of the exit. So we only need to win 34% to break even for the strategies because we are earning 2 ringgit every time we win and we lost with 1 ringgit. So you need to win 34 out of 100 times to be break even. So wherever you win more than 34 times, you will be profitable. And because the winning ratio is 44% here without any filtering, so it means profitable. And when we come to evaluate a trading performance, the two data here are also very important. Profit factor 1.94, it means the total profit I earn from the market is 1.94 point average, and I will lose with 1 point. So it means every 1 point I lose from the market, you're able to these strategies compensate to me 1.94. And the maximum drawdown is 100 point. It means in the worst case scenario, the accumulated losses of this strategy is 25,000 ringgit. And even it's profitable, but this is not a satisfied result. Why? Because we have two issues there. First, we have many trades there, 2,600 trades. Okay, if you just count by cost, okay, our trading costs every single loss, it will cost us 1 point from the market. So the total P&L 5,700 points, deduct by 2006, we will just earn 2,100 points there by using these strategies. Then the second problem is we are worse than the monkey. The monkey flip coin, 50% you will get head, and 50% you will get tail, but the winning ratio is only 44% here. So with the power of technical indicators available and the calculations mathematics available in today's market, we basically can increase this winning ratio. So we have two objectives here, okay, to enhance this result if possible. So I spent quite some time to look for the enhancement. I try many indicators to put into the Excel and see the final performance is not good at all, but maybe I didn't utilize all the edge of the technical indicators, but the Bollinger Bands improve the result. Bollinger Band is so common, very common, just like MACD indicators, and widely common use, but I never know that it able to improve my results. So just now, the initial trading plan is just very simple 4-bar low, but this time we will use Bollinger Band instead of the 4-bar high sell. So hopefully it will help us to filter out the sideways market and give us a more solid result. The Bollinger Band is basically a very simple approach. It consists of three lines. Okay, the first line is the middle band. It's a 20 simple moving average. Then you have the upper band and lower band. Basically, they are the 20s, the 2 times standard deviation of the given calculations. Okay, add into the 20 simple moving average, it will get you the upper band, and deduct the 20 simple moving average, will give you the lower band. So for statistics manner, standard deviations, it means volatility. If the standard deviation is high, it means the volatility increase, the price movement increase from the market. If it's low, it means the market is a very sideways, slipping in an equilibrium manner, it's not moving at all. So how we incur Bollinger Band in our trading? Basically, every time when the market come to the upper band, only we will follow the long. So whenever the signals are trading the price within the band, we won't take any signals. Only the bar come to the upper band, we will go long, and come to the lower band, we will go short. So whenever we go long or short, the exit rules is still the same. 1 ATL for cut loss, 2 ATL for take profit. So going back to the earlier slides of the samples, so this time all the signals here are the previous trading plan. So by putting Bollinger Bands there, you can see there are some signals we will ignore from the trading strategies. So like this, the first one here, if you can see my cursor, the first signals is within the band, so we will ignore this signal. These signals we will follow, okay, because it's hitting the lower band. And these signals, this third cursor, okay, these third signals we will ignore because it's within the band. And this we will ignore, this will be followed, this will be ignored, and this will be ignored as well. So after that, we only have 2 signals left. Okay, so you are saying maybe the profitable trades is being ignored, but it doesn't mean it don't work. Okay, most important is the majority of the loss trades have been ignored from the trading idea, but it will retain the profitable trades. So in this example, we basically have just a little bit of the data. We need more data. Okay, so I'm putting it back to my Excel. Okay, and these are the results that I gather. So on the right side, okay, on the right column, you can see basically the previous result. We earn 5,700 points with a winning ratio of 44%. But once we put Bollinger Band there, okay, we earn 5,100 points, by 600 points lower than the previous trading idea. But this time the total trades are down by more than 50%, from 2,600 trades, and it reduced to 1,002. Okay, but our P&L just dropped by 600 points. It means even 50% of the trades have eliminated, but it's still able to retain most of the profitable trades. And this brings out our winning ratio to 57% from 44%. Okay, and the drawdown also reduced by 40 points, and this is encouraging. Okay, but this is not enough because the backtesting result is 4 years from 2013 to 2017. So you may ask, is this trading strategy is still working? Okay, I will answer you accordingly there. Okay, so it solved the two initial issues there, and the profit per trade increased from 2 point to 4 point. It's more effective with the Bollinger Band method. Okay, so I will go to do some simulation and will show you the first half result of this trading strategy. And bear in mind, these trading strategies is basically a hypothesis result. So when you go to trade, let's say when you go to trading in the market, basically you will have slippage, you will have many different scenarios. So these results basically is hypothesis testing result, okay, for you to understand how systematic tradings work. So the trading plan is very straightforward. So we will buy when the price hit the upper band, and we will short when the price hit the lower band, and we'll exit with 1 ATR and take profit with 2 ATR. Let's see the result. Okay, and before that, we will still have a few rules here. So this is an intraday trading strategies. We will enter the market after 10:45. Okay, sometimes there will be gap during the market opening, so we'll let the market settle down. Then we will follow the signals after 10:45. Then we will exit any positions before 4:45. So we won't have any trades carry overnight. And we will avoid any signals after 5 o'clock. So if there's no any signals from the market in that day, so any signals come after 5 o'clock, we will ignore. And also we will cancel if the signals come in the early morning, but it doesn't fill any position. So in the second trading session, we will cancel that. We won't follow the signal, the earlier morning signal anymore. Okay, these are the rules. Basically, it's very simple and logic. So what you see now is the first month of this year. Okay, so from 16 January to 15 February. Okay, so these are the signals using that trading plan. Okay, and I just give you a quick look using trading view with the Bollinger Bands there and the trade result here. So in the vertical line, you see there were 17 trades, and the first trade lost 28 points, second trade lost 24 points, things like that. Okay. So in the total summary, you can look at the table. The gross P&L here is 5,000 ringgit. It means the point here I already times 25 for your convenience. So you can basically see the performance is earning 5,000 ringgit in Jan to February. Okay, and the winning ratio is 60%. So these trading strategies are testing only used on the third month. So at that time, the FCPO April is the most active month. So the trading strategies will be utilized at that month only. Moving on to February 16 to March 15. So the total P&L is 6,000, close to 7,000 ringgit. Okay, total 15 trades, and the winning ratio is 67%. Okay, there always a reason why there are some months you will earn more, some months you will earn less. It's because of the price itself. If the price is very volatile, then it's good for these trading strategies. So when you look at any trading strategies, you look at their rules. Basically, you can categorize their trading strategies into two categories. One is either is a trend following strategies, breakout strategies, or is basically a mean reversion strategies. So the strategies you've seen today, going long with upper band and going short with lower band, basically is trend following breakout strategies. So when the market is trending, so these strategies will work very well. And the hard time for these trading strategies will be the very choppy periods, very sideways, no low volatility period. And in March 16 to April 15, you see it earns 6,000 ringgit, but this time the winning ratio is only 50% because you can see the price movement in that month. Yeah, it's very choppy there. And April to May, okay, you can see it's quite trending, but we have two occasional sideways range there. So the winning ratio is only 53%, and out of 19 trades, it earned 4,600 gross P&L. Okay, so I will move on to the live chart here, okay, to simulate this to simulate these trading strategies in the live chart, I will use a playback function. So today the live simulation will be using the FCPO August month Q, SCPO Q 2021, and in the 15-minute charts. So like what you see in the trading plan, we will need two indicators here today to simulate the result. So the first one is we need Bollinger Band. Okay. Immediately the Bollinger Band come out. And the Bollinger Band parameters will be the default parameters. It will be 20 simple moving average using the closing price as computation and 2 standard deviation as default. And the average true range will be at the bottom of the chart, and these parameters is also 14 is default. Okay, so I'll be testing 2 weeks to simulate how this trading plan works from May 31st to June 16th. Okay, 2 weeks. So I will use the playback functions here. Okay, we will start anywhere here. Okay, then we will start playing. So what you need to monitor is the entry. Our entry is we will go long when it hit our upper band, and then we will go short when it hit our lower band. Okay, so what you need to see the two lines there. So when there's a candles pricing hitting the upper bar, then we will go long. Hitting the lower bar, we will go short. Now I will play. Okay, so this is 31st May. We will start trading from 1st June itself. Okay, so here we have a signal bar here. Okay, at 1st June 11:30, the price go lower than lower band. Okay, so basically this valid have our short signal. Okay, short signal. So immediately we will look at the ATL there. The range is 30 point. So I will put a sell stop. Okay, the trading strategies will put a sell stop there at 3858. Then the cut loss point, it will be 30 point from the entry and 60 point from the entry. So the sell stop order will be 3858, the cut loss will be 3888, and the take profit will be 3798. So that will give us a two times risk reward ratio. We will lose 30 points in maximum. We will profit with 60 point maximum. So this will consistently give us a 2 times risk reward ratio. So here in RHB futures, we are offering 3 trading systems to our client, namely QST, AES, and CQG. Okay, so for example, like in the AES trading system, we have this order called bull and bear order. Okay, so for example, like this, we basically will be using the bear order here. Okay, why we use a bear order? So bear order will tell the system, okay, we will want to short at 3858 after 11:30. Okay, so we will place that order. Then immediately we can place a stop loss order and a take profit order. We call that an OCO order. So an OCO order basically means one cancel the other. So it means if after we fill this position at 3858, then immediately the system will park your OCO order, okay, into the exchange, into your account. Then if the price comes to your cut loss point, then your position will be closed. Okay, it will be long. The system will trigger the stop and it will be close the position. Then your take profit orders will be cancelled immediately. So we call this an OCO. So in AES, we have bull and bear order to cater for this. In QST, we have contingency order to cater for that. Okay, it will work systematically. And in CQG, we call this a bracket order. So basically, it's very convenient, and all our 3 trading platforms come with mobile apps. So it's very convenient, and that's the reason why we are the best futures broker in the market for some years. Okay, so let's continue with these trading strategies. Let's monitor how it performs. Okay, so now I will just continue to play. It's just like seeing what happened. Okay, so immediately the first trade we lost 30 points. You can see the price movement come down, hit our fill our short position, then it go up and hit our stop. Okay, so here we lost 30 points. Okay, so let's see what happened. So let's wait for the next signal. Okay, we have a short signal here, but this is basically 5 o'clock. If you can look at the bottom line there, the time there. This is 5 o'clock. So like our trading plans stated, we don't follow any signals after 5 o'clock because there's only 1 hour for us to cut loss and take profit. It's not worth the time to for that. Okay, don't risk your money easily. Okay, yeah. Okay, then we have a long signals in the next day, 2nd June. Okay, so I will play a few more candles. Let me illustrate a bit. Okay, okay. So here you have multiple price zone hitting the upper band. So the first signal is here to long at 3984. The second signal is here to long 3971. Then the third signal is here to long 3960. The 3 candles hit the upper band. So which one to follow? We should always follow the lower one. Okay. Buying at the lower price basically gives us a better edge. So you always want to buy low, sell high during a bull phase. You always want to sell as high as you wish. So here the trading system basically go long at 3961. Okay, and the average true range is 28 point here. So 56 to take profit and 28 to cut loss. That will give us a price of you go long at 3961. You will take profit at 4017. Then you will cut loss at 3933. Okay, then this order immediately fill in the next candle at 11:15. Then let's monitor the result. Okay, so you take profit at the afternoon session 2:45. Then we have 56 point profit here. Then immediately you have another signals here. Okay, so for real tradings, you can equip with some trading stops idea or whatever, but this trading plan basically just a very dummy one. So it will go long in the next signal as well. So just for illustrate purpose. So this time the ATL reading is 27. So 27 for us to cut loss and 54 point for us to take profit. Okay, so immediately the long signal come at 2:45. Then 3 o'clock, we will go long again and it failed. Then this time, our take profit at 4082 and cut loss at 4001. Then let's see what happened. Okay, so the price come to our take profit level at 5:30. Okay, so we have a handsome 110 point in that day. Okay, we have a super get up the next day. Okay, so basically here we will go long. Okay, this signal follow the lowest one, and the ATR reading is 32 point. Then 64 to take profit and 32 to cut loss. And by the way, ladies and gentlemen, if you have any questions, please use the Slido to reach us. Okay, I will come to your questions shortly. Okay, so this hitting our cut loss point. Okay, I will go a bit faster. Okay, so we won't follow this signal because it's 5 o'clock, and we will go short if the market come lower than that. Okay, so this is 68 point, 34 to cut loss. So the order is filled and it cut loss later. Okay, and we are at 4th of June. Okay, I will play a bit faster for illustration purpose. And we have another sell signal here at 8th of June. Okay, so the order fill immediately at the next 50 minutes. So 32 point is the ATL reading, 64 to take profit, 32 to cut loss. So it's shorted. Okay, then you take profit there. Then we have another sell signal over there. Okay, so the dummy trading strategies will follow. The ATL is 29, 58, take profit 29 to cut loss. Then it fill. okay, then it take profit again. So it's a very good day. We have 2 profitable trades that day. So we're coming to 9th of June. The market is still very sideways within the band, so there won't be any trades. Okay, so we have a sell signal there. Okay, this is 245. The ATL reading is 31, 62, 31. And it filled. The order fill are in the next 30 minutes. Okay, it hit our profit, 62 point there. Then in the next bar, most probably we will have another sell. Okay. Yeah. Or it's 5:30, so we won't follow the signal. It's after 5. Okay, so we have a oh, this is also 5. So okay, so this day we will have a sell signal here, over here. ATL is 35, so 70 point to take profit and 35 to cut loss. Okay, so it hit our profit at 5 o'clock. It's a long waited day. Okay, then the next day we have a gap down, then we have a follow sell. This gives us a huge range of 41 point ATL. This gives us 82 point to take profit, 41 to cut loss. Is a very, very big range. Okay, so it hit our profit, then we will follow the sell again. Okay, so I will immediately show you the result, and this is how the trading plan work in the hypothesis historical backtesting basis. Okay, so if we move back to the slides, these are the total summary result from May 16 to June 15. It basically earned 11,000, and the winning ratio is 57% because of the huge market price movement. So the strategies, if you ask the strategies workable or not, yes, it's still working fine. And of course, we won't stop here. Every knowledge we need to read and further study. So these are the 4 books I will recommend to you if you want to understand systematic trading, upgrade from just technical indicator technical trading, go to systematic trading, go to algorithm automation trading. These are the few books that you can have a read. Okay, if you have any questions, please type on the Slido. Okay. Yep. So I will come to you with some Q&A. Okay, so the first question is, hi there, from your opinion, which method do you think is better? I think both fundamentals and technicals are important. Yeah. You cannot trade only using the price. There's always an engine behind the price momentum. It comes from fundamental. In your opinion, what will be the growth of palm oil in the coming 5 years? The growth will be demand. The always demand. Yeah, the population grow, the more usage of palm oil. Yeah, and the biodiesel local consumption. Given current pandemic with limited movement of getting labor help from, how this affect the futures price? Yeah, of course, if you have a supply limitations, that will give us less production to the market. And yeah, you have a disrupt supply chain. Is just like all the commodities price. Why they are so high is because the COVID basically affected the usual supply chain. Other than soybean, what else affects CPO price? And just like the agenda too, we talk about the supply chain, the labor, things like that. There's a lot of factors will apply CPO price, not only the substitute price. The demand, the supply, country policies, ringgit and dollar, ringgit and European currency, or new policy or new inventions, all will affect the CPO price. Can you share the Excel formula or buy sell simulation, is there any way we can get this Excel? My Excel is very badly written. It's just like everywhere. It's not a user-friendly Excel, but if you want, you can go to our booth, talk to our dealer. Okay, I will personally send to you. Yes, BMD announced night trading. Okay, we'll come to that. Can Bollinger Band plus ADR used for OV trading? I'm not very sure what is OV there. Okay, for automation, it's RHB, yes, but not our platform, but we can facilitate, we can provide the API services for you to do algorithm trading. I'm trading one contract and not getting consistent profits, trading two or more. No, the way how you trade is important. It's not trading more, it will be profitable. It depends how it works. So for example, like why the trading strategies I present to you works is because of the exit logic. Yeah, the software I'm using for bar replay is basically TradingView. Did you enter when the 15-minute signal candle close price? So when there's a 15 minutes bar hitting the upper band, so high price will be the price level, price reference level for these strategies to go long. Amazing technique. Thank you. Okay, so give me some time. I need to do some marketing for my peoples. Okay, so the trading resources, what you need to know about FCPO is like there's an earlier Q&A talking about this FCPO night trading. So it will come at December 2021. So this trading session will start from 9:30 to 11:30. So it's good. It's good. The industry is progressing. Okay, and this is good for all the traders that we can tap palm oil price to the US soybean oil markets and the Dalian price at the night session. And BURSA initiative to launch the East Malaysia crude palm oil futures somewhere around third quarter. So East Malaysia crude palm oil futures basically is just like the FCPO contract that we discussed today. It's basically have mirror the same specification, but the trading hours will start from 10:30, but the fee ball will start slightly earlier. Okay, and there's a reason why we need two contracts because of the delivery. The physical delivery for FCPO currently only cover the peninsula, so the East Malaysia crude palm futures will cover the ports in the Sarawak and Sabah region. So the price difference will create another opportunity for inter-commodity spread trading. So that will give you a spread credit of 70% if you trade FCPO and FEPO, but we won't cover spread trading today. And of course, for anything you learn, if you are new to this market, everything you must learn. So BURSA Marketplace provide you this derivative trading simulator. You have a 30 days QST access. Okay, you can try to trade with a real-time feeling, and this is a very good effort by BURSA. Of course, QST platform, once you know how to use it, you can come to RHB Futures for trading because we also have a QST platform. And at the same time, we also can offer you the QST simulation trading for you. And all these resources, I will put into the notes. You can go to our booth and download all these resources and also the slides. Go to our booth, talk to our people. Yeah, and BURSA Academy have excellent info there. You can go to the derivative section. Then you can learn more about the market, not only FCPO, but also FKLI and the other products. And stay tuned on the events. Okay, I will continue to, we as an industry will continue to bring more interesting topic to the public. Okay, open accounts with us, then our futures dealer will tell you in the RHB event. So in RHB Futures, we have 9 desk support. We have 38 branches around the nation. In third quarter, we will carry 30 webinars, internal and external, and we have 3 platforms for our clients. And the algo trading facility is also available, and this is the reason why we are the top futures broker in Malaysia. Remember to go to the booth We have the diamond light blue on the top right corner, and we have 30, 40, or 50 dealers waiting you to contact them. So go and speak to them and open an account, of course. Yeah, and that will give us your most supports. Go to talk to them. They are wonderful people, excellent people. Of course, you go there. Okay, you will get this small cap book as well. So our research house every year will publish the best 20 small cap for 2021. Okay, you can get this book free today if you go to our booth and talk to our dealers. And not only that, we have morning kappa close group for our client. So in this close group, our research analysts every day 8 o'clock. Okay, you can listen to the professionals about the latest update on the sectors, everything. Every day 8 o'clock, and every Wednesday we will have corporate presentation from the listed company managements. So morning kappa is definitely the best way you can reach out for the best information from the professionals. So join us in morning kappa. Of course, you need to have an account with us. And we also launched telegrams recently. Okay, you can get the latest info, and this is how we service our client. All the resources let us continue to stay on the top. We are the best futures retail broker. We are the best equity retail broker in 2020. And thank you for all the supports, and we need your supports going forward. Today's open accounts is free. So the CDS fee waiver, 10 ringgit will be waived. Okay, go to our booth, talk to our people, they will tell you. And not only that, you will gain 5,000 smart point on your first trade. Okay, and this smart point can be convertible to the other benefits. Okay, in case some technical issues, so this QR code will help you to reach us. You can scan this QR code, okay, and drop us your info if you want to know more. You want to open an account, you want to get more info. Okay, this is the other way to reach us. Okay. Thank you for your time. Yeah, thank you for your time. I will pass back to the moderator.
Welcome to the first virtual BURSA Marketplace Fair. We are glad to have you here. Please watch this short walkthrough video on how to navigate the virtual platform. You are now in the virtual event lobby, where you can navigate to any part of the event. Here, we have our virtual exhibition hall with a lineup of all our exhibitors. This is our agenda for the day. Be sure to attend the sessions you're interested in. Our conference hall pages, where you can navigate across pages or ask questions. Our speaker page with the lineup of all our distinguished speakers. Our event survey page. Be sure to fill this up during or after the event. And here is our giveaway room, where you will be able to win amazing prizes through the giveaway and tournament. For the giveaway, just complete 2 mandatory tasks and a combination of 2 of the additional tasks to stand a chance to win. For the tournament, participate in all the 7 quizzes and stand a chance of winning 500 ringgit, 300 ringgit, or 200 ringgit. Let's return back to the exhibitors. Here, you can chat, video call, or meet up with our exhibitors. Below, you will find all the relevant information from about, to contact details, and their wide range of resources. To participate in the chat, please click on the chat button. This will send a request to the exhibitors to accept your chat. Once the chat has been accepted, it will appear in your direct messages, where you can chat, have a one-on-one video call, and get the representative's details. In your briefcase, you will find all your bookmarked resources and the contact details that you have saved. Be sure to always look at our announcements for the latest happenings. We hope you have a wonderful event.
Good afternoon, everyone. I'm Hero from BURSA Malaysia Derivatives, or in short, BMD. So a big welcome to Ting Ting, and thank her to be with us today in virtual BURSA Marketplace Fair. Ting Ting is Managing Director of Excellent, and she's also the author of the famous book, Jumpstart in Stocks and Futures Trading. Today, she will be speaking about how to enhance your stock portfolio return with futures. Just a reminder to audience before we start, her presentation is provided as general information and not an investment advice, offer, or solicitation for buy or sell of any products. So, Ting Ting, let's imagine I'm a beginner in futures trading, despite some experience in stocks trading. Can you simply explain what futures is in one sentence, please?
Hi, Hero. Hi, everyone. Thanks a lot, Hero. Now, if I'm going to explain what is exactly a futures, right, I'm not going to come from academic perspective. Because coming from academic perspective, you're going to have a very long sentence, and you're going to see some many jargons as well. Then you're going to see some things like a standardized contract, which is very difficult for many of you to understand. So I try to explain in a very layman terms in one sentence. So futures is like something you forecast in future what is going to happen in future, and you are going to buy or sell accordingly. That's it. So futures is that simple. Maybe later I will explain in details and do a very quick summary before we moving into our today topic about enhancing our portfolio with futures itself.
Very well. I'm sure audience would like to know more in details. Without further ado, over to you, Ting Ting. The stage is yours.
Oh, okay. Let me share my slide first. Yeah.
Okay. Great.
Now, I believe right now you all can see my slides, right? Just a very quick introduction about futures before you really understand how to enhance your stock portfolio with futures, right? First thing you need to understand what is exactly a futures contract. Now, prior to that, you even need to understand another what we call as jargon, derivative. But I'm going to explain to you in a very simple layman terms for you to understand exactly what is derivative. Because we notice nowadays, many of the so-called as retail, many of them, they're not go into futures trading is because they find that, hey, we have so many jargons. But actually, once you understand so-called as these all jargons, you'll find that futures is as simple as your stocks. Even sometimes, some of the retailers will perceive that futures is even more simple compared to your stock trading. One of the reasons is because your stocks, technically, you have more than 1,007 stocks, including your warrants. But in futures, technically, you have 2 to 3 counters, commonly being traded by retailers. So first thing, we need to understand what is derivative. And derivative in the layman terms is like, for example, I'll give you an example. We derive from our parents. So without our parents, we are nobody. So for example, if we want to know what is our characters or our behavior, we can look at our parents. So our parents, they are the underlying, we are the derivative products. So I repeat, we are the derivative products. Our parents, they are the underlying products. So let's say, for example, if my parents, they are very hot-tempered, I'll be very hot-tempered as well. So more or less, we need to look at the underlying itself. Later, I'll explain to you in details about this derivative and the underlying. So once we understand what is this derivative products itself, then the next thing we can understand what are the 4 common derivative instruments. Now, instruments, another words we also can call it as a products. So we have 4 common derivative products. One is futures contract, one is forward contract, one is option contract, another one is swap contract. But for today's purpose, we are going to look at only futures contract. So we are going to highlight what is exactly a futures contract. So this is the elaboration for futures contract itself. Now, if you really want to understand what is futures, we can understand from these 5 segments or areas itself. The first one is the definition. Second one is the terminologies. But as I mentioned to you, I'm not going to explain some terminologies. So long as I use it, I will explain to you. But if not, you can go and search for it. It's less than 10, those jargons. So don't worry. It's very simple. Unlike what we think that futures is very difficult. It's not some rocket science things. Now, the third thing is about the products available under Bursa Malaysia. What kind of products available under BMD itself? The fourth is the underlying market. As I mentioned to you, who we are, how we behave, we need to look at our parents. So we need to know the underlying market, which is our parents. So how they move will affect how we move as well. So how our parents behave will affect how we behave as well, more or less the same. Now, the last one, another jargon called contract specification. But if I'm going to put it in layman terms, this meant a user manual. So it's as simple as user manual. So for example, if today, let's say I bought a phone, I'm an older generation, I don't know how to use the phone. So first thing, I will check the user manual. I believe younger generation like you all nowadays, you all will check directly YouTube. But for us, we will check via our user manual. So, but normally, user manual is very thick. For these futures, their user manual is only 1 page on average. So don't worry about it. So contract specification, as I mentioned to you, is like a user manual. They will define what is exactly this particular products. So for example, if you are going to trade FCPO, you look at the contract specification for FCPO. If you are going to trade FKLI, you are going to look at the contract specification for FKLI. Now we are going to start with the first thing called product available. Now, this is exactly all the products available under Bursa Malaysia derivative. You can see that they have many products, but technically for retail, you are going to focus on these 3 particular products with the star. Can you see that? CPO futures, we have FBM KLCF futures, we have mini mid 70 index futures. So these are all the index futures, and this is the commodity futures. So along the way, I'll give you some of the example, and we are going to define some of the key terms as well. Now, the underlying market, as I mentioned to you, we have our parents because we are the derivative products. Futures is part of the derivative products. We have our parents. So you just need to look at those in the bracket. Can you see that we have our underlying products, FBM KLCI. So how FBM KLCI move more or less will impact our FKLI movement as well. So we need to know who is our parents. Then we will know how the kids is going to behave. The same thing. So the second thing, we are going to look at the FTSE Bursa Malaysia Mid 70 Index, which is what we call as FBM Mid 70. Then we have the futures products as well, what we call as FM 70. And the third one is the crude palm oil, whatever trading outside in the physical market. And in futures products, similarly, we have a futures products called FCPO, crude palm oil futures. So it's not that difficult to understand. It's just that our industry is full of jargon, but this all jargon is not that difficult for you to understand. We are going to convert some things to a layman perspective. Now, I just give you some example. This is exactly our FBM KLCI. Can you see that? So this is our underlying products, which is our parents. And the below, this is all our futures. So you can see that we trade in accordance with the FBM KLCI as well. So more or less, we are being impacted by our underlying, which is our parents. Futures, we are the futures, we are the kids, so we are the futures. Now, when it comes to contract specification, I'm not going to run through every product, but I'm going to start with the simple products. For example, first thing, where can you get this contract specification? I believe many of you, where am I going to get it? It's like you are going to search for a user manual. Normally, you go to YouTube. Am I correct? So in this case, the contract specification, you can go get it under bursamalaysia.com. Then you just need to click trade. And you need to click derivative. So once you reach the derivative itself, they have many different products. Search for the products that you want. And I'm going to show you one of the example. Can you see that this is exactly the example of FKLI? It's about half a page only, very short. Unlike your normal user manual, very thick, normally you don't read. So this is very short. They only define exactly what is this product itself. So let's say if I'm going to pick up some important points, the first thing is about your contract size. We need to know how big is this contract. So technically, can you see that your contract size is your FBM KLCR multiplied by 50 ringgit Malaysia, meaning what? Every 1 point is equivalent to 50 ringgit Malaysia. So let's say if I make 10 points, I need to times with 50 ringgit Malaysia. If I lose 10 points, I will need to times with 50 ringgit Malaysia. So you just calculate every point equivalent to 50 ringgit Malaysia. Now, second thing, the minimum price fluctuation is 0.5, meaning whenever the market moves, it needs to move by 0.5. Let's say, for example, right now the market is 1,005, then the next point will be 1,005.5, then 1,501, 1,501.5, 1,502, etc. So it's quite simple for you. So since 1 point is 50 ringgit Malaysia, half a point definitely is 25 ringgit Malaysia. Now, the rest, you can read by yourself, those limit up, limit down. Then the contract months, meaning that the months that you can trade, you can read it by yourself. I just want to highlight one thing is about the spot month. Spot month meaning the current month. So right now we are in the month of July. I believe you are in the same world as me. So we are in the month of July. So the next month is August. Then subsequent 2 months, calendar months will be your March, June, September, and your December. So current month is July, next month is August, subsequent 2 months will be September and December. Now, trading hours is slightly earlier compared to your stock because we are more hardworking in derivative market. So we start at 8:45 until 12:45, even then we close 15 minutes later compared to your stock market. Second half is 2:30 until 5:15. You can read it by yourself, but why we start earlier and we close earlier is actually nothing to do with whether we are more lazy, we are more hardworking. It's just that it's partially because of hedging purposes. But later I'm going to explain about it. Now, this is exactly the screenshot as per the trading platform. You can see this is exactly as per the screenshot. You can see that currently we have July, August, September, and December. So the common question being asked by retail is, which month should I trade? So many months. So which month should I trade? So the simplest for you to understand is, for retail, you always trade spot month for FKI. Just remember this. If you're trading FKI, you only trade spot month. If for FCPO, you're going to trade third month. Now, both the same FKI, those index. But for me, when it comes to trading, I don't like people to memorize. If you do not want to memorize, you always look for the highest volume and you are going to trade for that particular month, you will not be too wrong. I repeat, just look at the volume. You don't need to memorize whether I need to trade spot month, need to trade third month. Just look at the highest volume. Can you see that? Then you will understand. So this is all those very simple concepts about futures. So later, maybe we are going to look into, for example, how to enhance your portfolio, stock portfolio, then those trading psychology, etc. Maybe I pass it back to Hero. Hero, I think you mute.
Thank you, Ting Ting. I'm sure when trading in asset classes, be it in stocks, ETF, or etc., there are key things that investors must know before starting to invest. So could you please summarize the key things that investors must understand beforehand in futures trading?
Yeah, technically, commonly, if we are not going to look at any screen or we are not going to look at any explanation, right? Technically, we are going to start with two. So first thing, what we are going to concern is how to buy and sell. That's the basic. It's like, if we are going to start with stocks as well, the first thing we ask, how to buy and how to sell. So this is the first thing we need to understand. Then second thing is definitely how to calculate your profit and loss. Because when it comes to trading, you definitely need to understand whether you are making money or not, you're losing money or not. Some of you, when you're losing money, you're not going to look at it. So later, when it comes to trading psychology, we'll highlight this part, but these are the main two things that you need to understand.
All right, thank you. This sounds very familiar with any investment products, but I'm sure there must be something different in futures. So Ting Ting, please tell us more about it.
Okay, maybe let me share this. First thing, right, about buy and sell, right, the main difference between futures and stocks is technically for your stocks, you cannot start by selling. But for futures, you can start by selling even without any borrowing. For example, for your stocks, if you're going through RSS, you will need to borrow the stocks before you can sell. But for futures, if you anticipate the market is going to go higher, you just buy, then subsequently you sell. If you anticipate or your forecast is the market is going to be trending downwards, we can just sell, then subsequently when the market retraces, we just buy back. Now I'm going to show you exactly how to buy and sell. Now, common uptrend, we buy, downtrend, we sell. So another jargons in our industry is about long and short, but it's more or less the same thing. So it's long and or buy, short or sell. So as usual, buy low, sell high, or sell high, buy low. It can't be the other way around. So technically, so long as you fulfill this, then you're having a profit. If anything opposite of this, then you are going to have a loss. Now I'm going to show you exactly how do you do that. Now we're going to start with this table. Can you see that if I open a position by buying, then subsequently how do I close? Opposite. So I sell it. Now let's say if I decided that I'm going to start with the contract sell. Remember, you don't need to borrow anything. You just need to directly click sell button. Don't hesitate about it. Many of the retail, especially you are long in the future stock market, you hesitate. Hey, can I start by selling or not? Just don't hesitate. You just directly press sell button. Then subsequently, when you want to close the position, you just need to click buy to buy back your position to close it. Now, this diagram will show you very clearly how do you make profit and how do you buy and how do you sell. For example, let's say if I anticipate the market is going to go higher, at the bottom, I start to buy. I open the position. So the market, when it moves to a higher price, for example, I just close my position by selling. Now, the same thing. If I anticipate the market is going to drop, I start by selling a position. Then subsequently, when the market drops, I just need to close my position by buying back. So very simple. You don't need to borrow anything. You don't need to hesitate. The buy and sell in your trading platform, they are the same. Now, I'm going to test technically. Some of you, I understand that you cannot answer, but you just can think the answer and give the answer by yourself. Now, whether to buy a FKI or sell a FKI contract. Let's say, for example, if our GDP, Malaysia GDP announced is better than expected. Just give it a thought. I give it 10 seconds. Whether should you buy FKI or should you sell FKI? Give it a thought. So give it a thought, then I'm going to release the answer in a short while. So in this case, I believe many of you managed to get the answer right. So your GDP announced is better than expected, meaning your economy is better. So technically, you're expecting our stock market to be doing better. So the same thing, the derivative products like us, we are the kids, we are expecting moving the same direction as our parents as well. So in short, if I anticipate the stock market is going to be higher, technically, I just need to buy FKR at this moment. So subsequently, when the market surge and reaching the level that I want, I just need to sell a position to close my contract. As simple as that. Now, how to buy and sell, do you notice that this platform looks familiar? Because all the trading platforms, they are the same. It doesn't matter you are in stocks or you're in futures, more or less they are the same. So you can see that the trading platform, they are more or less the same. Then here is the buying and the selling order ticket. So buy and sell the same. The only difference, as I mentioned to you, you're allowed to start by selling. So if you're going to start by selling, you just need to click sell button. Later, I'm going to show it to you. Now, second thing about profit and loss calculation. This is the common question people would like to ask. Now, again, uptrend, we buy, downtrend, we sell, buy low, sell high, or sell high, buy low. Anything opposite of this, you are going to have a loss. Anything following this direction, you are going to have a profit. I'm going to give you one example. Let's say 5th of August, overnight Dow Jones closed higher by 300 points. So you believe that the FKR is going to go higher. That's why you make a decision to buy. So let's say you bought one contract of FKR at 1,006. Now the next day, FKR already trading at 1,616. So you decided, hey, maybe I already make sufficient money. So you want to close the position. So you sold one FKR contract at 1,616. So can you all please tell me whether you are making profit or you are making loss, and how much is it, not only how many points, so you need to know how much is it. So a tips for you all, before you start to calculate, FKI, every 1 point is equivalent to 50 ringgit Malaysia. Remember, you can go and check your contract specification, which is your user manual, then you will understand. So you just roughly calculate. I'm going to give you the answer. So can you see that you just need to take 1616 minus 1006 times 50 ringgit Malaysia. This is defined in your contract specification. So because you buy low and sell high, you are having a profit. If you buy high and sell low, then you are having a loss. Simple, right? So, but this is exclude your commission, etc. But don't worry, in futures trading, your commission is very low. Technically, every 1 tick, you will get your return. Meaning 1 tick, you can cover all your costs, you get a return. I mean, in many of the products, trading products or investment products, it's very difficult for you to cover that. But in futures, technically, by 1 tick, you will cover all your costs. So these are the 2 things that you need to know about futures trading.
I think that's quite simple to understand, am I right? Now, I'm sure everyone has heard of don't put all your eggs in one basket since we were young. So in investment term, it's called diversification. So how could we apply it with futures contract?
Okay, let me explain to you with this concept called correlation. So before we start with low correlation, we are going to look at correlation. Sometimes when we are going to diversify our portfolio, we need to look at different products because different products, they will perform better at different times. I repeat my statements. It's very important for us to have different products in our portfolio. Your portfolio is like, for example, let's say you have 1 million to trade, or let's say you have 100,000 to trade. Are you going to put everything in stocks, or are you going to diversify it with different products or not? Because every product, they behave differently. So first thing we need to understand, the first terms, another jargon is called correlation. But I'm going to explain in the layman terms, this correlation as simple as is a relationship. So for example, let's say in our workforce, right, in our office, we tend to work better. For example, for girls, we tend to work better with guys, then guys work better with girls. So in a way, we complement each other. Because guys and girls, we have different advantages and disadvantages. So our weakness, our strengths, we are different. So when it comes to correlation, it's the same thing. We need to find 2 different direction markers. Their products, they move differently, and we put it into our portfolio. I'm going to show it to you in a short while, an example why you need to have different products in your portfolio. That's the reason why sometimes not only we should only move into stocks, we also need to enhance our whole portfolio return with futures itself. Futures nowadays is a must, like it or not, even in terms of hedging, even in terms of diversification, many other reasons, you need to look into futures itself. You cannot ignore that. That's the products that you need to look into it. Now, first thing, what is low correlation? Low correlation meaning what? If this product is having an uptrend, another product, let's say this is product A, is having uptrend, I'm going to search for another product that is having a downtrend. Then I'm having a different correlation. So let's say if I'm buying stocks, if I'm buying counter A, B, C. So if it's an uptrend, all the stocks moving higher, so every stock is making money. But if it's a downtrend, all the stocks also losing money. Where are you going to search for your profit? So this is the question that you need to ask yourself. Now I'm going to show you a comparison. Nowadays, you cannot ignore, for example, FCBO itself. This is another product. So let's say, for example, can you see that the market direction is different? I give you an example. This is your FBM KLCI. So this is technically quite flat. It's relatively flat. But during a sideways market, it's very difficult for you to make money via your stocks. So you can add your position or diversify your portfolio with, for example, FCBO, which can you see that this is a steep uptrend. So they have different correlation. So when relatively this market is flat, you cannot make money. You can go via FCBO to continue your profit, making money in this particular FCBO products itself. So you can see that most of the time the direction might be different as well. Can you see this is even obvious, more obvious? Downtrend, major downtrend, but this is a major uptrend. So in a way, it's like we are complementing our whole portfolio with different products. So when FBM KLCI, my stocks, I cannot make money, I can still continue to make money via FCPO itself. So this is what we call it as diversified in terms of return. So another concept is diversified in terms of risk. So there are many, many reasons why we really need to look into futures. One of the reasons is what we are going to cover today, which is we are going to search for different correlation. So diversification is very important. You cannot ignore. It doesn't matter whether you diversify from the perspective of return or you diversify from the perspective of risk. You also need to take into consideration.
All right. Thank you, Ting Ting. I'm sure everyone likes to be a winner in something. In BURSA marketplace, that means winning in the market. Ting Ting, please give us some tips on how to be a winner in trading futures.
Okay, very good. This is a very difficult topic. Now, before we really need to understand what are the three winning trading psychology, because when it comes to trading psychology is part and parcel as well. But the first question, many of you know the terms called trading psychology, but do you know exactly what is trading psychology? Or even I go one way further, one step backwards. What is psychology itself? Give you the thought, I give you 5 seconds. Can you tell me exactly what is psychology or not? Now, I believe many of you cannot really answer this question, right? Definitely. If you cannot answer, you're on the right path, don't worry about it. Because psychology itself is something very abstract. You can't see, you can't touch. So we need to really understand what is psychology. First thing I'm going to explain to you. Just imagine if you are sitting there doing nothing, and imagine you're sitting there doing nothing. Whatever flowing in your body, that we can consider as psychology. Some of you, what is this answer? It seems I also cannot understand, right? Now, later I'm going to show it to you exactly what is trading psychology and what is the 3 components. But it's common that even I explain to you, right, you cannot understand. Then you are at the right path. Because as I mentioned to you, psychology is something that's very abstract. You can't see, you can't touch, you can't exactly explain. That's the reason why we don't really commonly be seeing people explaining what is trading psychology. Just going directly with what are the winning trading psychology. But I'm trying to explain to you today what is exactly this trading psychology. Now, in trading psychology, if you really want to define to some things that you can see, you can touch, there are 3 components in terms of trading psychology. Now, the first component is think. The way how you think. Many of us, we thought that when it comes to trading, right, during trading itself, we involve trading psychology. That is not true. Actually, trading psychology starts even way before your trading. I repeat, trading psychology starts way before during your trading hours. That is like even during your preparation, even way back to your wealth management. I'll explain to you in a short while. So the first component is think. Second component is what we mention it as feel. How do you feel it? You need to understand. So every steps is very important. And the last component is what we call as do. Sometimes we stop at thinking, or sometimes we stop at feeling. Sometimes we don't do, or we understand, but we don't go and execute. Because sometimes understanding and accepting, they are 2 different things. Many of you, very confused. It seems that's 2 different wording. But don't worry, because trading psychology is like this. This kind of topics is exactly like this. So I'm going to show it to you exactly what are the 3 winning psychology. But in future, if I'm going to ask you again, what is trading psychology? You just need to remember these 3 components, which is your think, feel, and do. So if I ask you what is trading psychology, if you forget everything, just remember about think, feel, do. If you can remember these 3 components, you will know that when it comes to trading, when your trading psychology will involve. Later, I'm going to share with you. Now, first thing, when it comes to winning trading psychology, the first thing is you must be consistent in your decision making. we notice that many of us, when it comes to trading, we are not consistent. For example, sometimes you enter the market with TA, sometimes you enter the market with FA, sometimes you exit the market with TA, sometimes you exit the market with FFA, without any valid reasons. It's just like, I think today my mood is very good, then I just go with it. Meaning your decision making, you are not consistent. I'm going to show it to you exactly how do you overcome this. Now, I'll give you an example. To overcome, first thing we need to understand, when it comes to trading, we have many segments. For example, it involves trading methods, it involves trading tools, because along the way, when you make a decision, it involves many areas like trading methods, trading tools, trading strategies. You have many things to highlight, but I cannot put everything into this PPT. So these are the main part. So this is what we call it, the whole thing, this is what we call it as your trading system. So trading system, if I'm going to use a more simple terms, it's like your trading formula. So it's something very simple for you to understand. So you need to know what is your formula. Every time you follow according to your formula. Or another terms is what we call as SOP. Do you know what is your SOP? So your SOP, you need to be always the same. Then you can follow in tandem. So you must be very consistent in your decision making. Then your trading system plus yourself, this is what we call as your trading plan. So when it comes to trading decision, if you want your decision to be consistent, first thing, please ask yourself, whether do you have a trading plan or not? So if I'm going to exclude yourself, the next question I'm going to ask you, whether do you have your own trading system or not? What does this trading system mean? I'm going to show it to you. For example, in Malaysia, we have our traffic rules. Am I correct? We have our traffic system as well. For example, our traffic system, we have our traffic lights. So if our traffic rules tell us that when you see red color, you will need to stop. If you see green, you will go. So when we drive, reaching a traffic light, automatically, if you see red color, we will stop. If you see green color, we will go. This is very consistent. But when it comes to buying and selling, do you have a consistent decision making or not? Is it that you see red color, you stop, green color, you go, or today I see, is there any police or not? No police, I go. That is not the correct way. So first thing, you have a trading system, it will make your decision consistent. So when it comes to winning trading psychology, you need to understand this. So first thing, before that, when you think, how do you think? How do you feel? How do you do? Is very important. I'll give you an example. Even some of you, you think that, let's say for example, when I trade, I only look at during trade. This is not correct. Even before that, like wealth management, or whether should I withdraw my money after I have a profit or not. You need to go back to your initial wealth management. For example, if I pump in the money, is because I want to create an education fund, or even I want to create a retirement fund. So when you are having profit, you shouldn't withdraw consistently because you're going for retirement. So you need to understand this all must be consistent in terms of your decision making. Now, when it comes to white trading system, very important, is like your photocopy machine. If you have a trading system, automatically you can duplicate. You see red lights, you stop. You see green light, you go. You are very consistent in your decision making. At the same time, if you're consistent in your decision making, definitely you're going to be having a consistent return as well. So trading system will allow you to duplicate your decision making, duplicate your profit trades as well. We notice the main problem with many of the traders is you cannot duplicate your profit. Sometimes you make profit, sometimes you make losses. Sometimes this year you're having very high profit, but the next year you're having a huge losses. So first thing you need to overcome is having a consistent decision-making process. Now, second thing, this one is very crucial. You need to understand losses are part of trading. Many of us, we don't even understand. Even we understand, we do not want to accept, even worse. So you must understand and you must accept. Remember just now the think, feel, do. When you think, you must feel it and you must do it. This is all we call as trading psychology. That's why just now I highlight to you when it comes to trading, not only before during the trade, you need to look at or focus at your trading psychology. Even pre-trade, you need to look at your trading psychology. And after trading, you also need to look at your trading psychology. Now, many of us, when we move into trading, we are with the perception that we are going to make money. Now, I'm not going to say that this is right or wrong, but you need to understand that losses are part of trading. If you cannot accept this, my personal advice is you might not be suitable to go for trading or even investing. So you must understand and accept it that losses are part of trading. And if you really backtest, well, we do a lot of backtesting. If you really go and backtest, many of the strategies, they allow you, if you are going to have a profit, your winning trade of more than 50%, these strategies already considered very good. So if I'm going to take up something, for example, let's say it's only 50%, meaning if you execute 10 trades, only 5 trades you are going to have a winning trade. Another 5 trades you are going to have a losing trade. But it's just that when we win big. When we lose small. So you need to accept that even any very good trading strategies, it's very difficult for you to have a winning trade of more than 50%. If you can achieve more than 60%, that is extremely good already. So you just need to take it that losses are part of trading. When you start to trade, you need to prepare yourself for this part. Now, the last part is in terms of winning trades, trading psychology is you need to understand the importance of trading. The importance of trading, including, for example, just now remember the traffic light. If you see red lights, you need to stop. As a Malaysian, we used to see red lights. What we do? See, got police or not? No, we go. But when it comes to trading, if you don't follow your discipline, if you are not disciplined as well, it is going to impact. But trading psychology, many of you would think that it's only about trading mindset, about discipline. Actually, everything is into this trading psychology. So as I mentioned to you, if you really want to understand what is trading psychology, just remember the 3 components: think, feel, and do. They are the main 3 components. So discipline is part of it. For example, the discipline even start with the first step. When you think, how do you think before your pre-trade? Do you do your homework or not? This is part of your discipline. Do you really follow your wealth management or not? Do you really follow your trading plan or not? Many of us, we plan everything. We write it down, but when it comes to trading, you don't really follow your trading plan. So remember, you must follow your trading plan, and you need to follow the things you do. You feel accordingly, and you execute or you take your action in accordance with what you have planned, with what you already initially think about it. So need to understand, this is part of it. You need to have a discipline, but please bear in mind, discipline is not only equivalence to trading psychology. Many of them thought that trading psychology is equivalent to discipline or even trading mindset. No, trading psychology is about the 3 components: think, feel, and do. I hope that these 3 winning trading psychologies will help you. Hero, your mic.
Okay, sorry. Yeah, it reminded me of the old days when I was a badminton player in school. You must have a discipline. Lose in the game is part of the journey, and the more you learn from the losses, then you continue to be a winner. Then yeah, that's how I succeeded in my badminton time in school. Okay, I'm sure you have furthermore advice in your following slides. Could you tell us more, please?
Technically, later through the trading simulation, right, I'm going to show you more. But before that, I just do a very quick summary of what we have covered just now. Now, 4 key takeaways points just for you to understand before we proceed. Now, first thing is we already explained what is exactly futures. So in terms of definition, in terms of terminologies, the products available, then for example, for retail, you can trade FCPO, FKLI, FM70. Then the underlying market, we need to know who are our parents, who is our parents, because how they move will impact us as well. Then the last part is your contract specification. So as I mentioned to you, you can go to bursa.malaysia.com, then you go to trade, you go to derivative, you can search for all the contract specification. Very short, half a page to a page, then you define accordingly. For example, if you go through the FCPO, then you will see that every 1 point is equivalent to 25. So accordingly, you will understand how to trade FKI, how to trade FCPO, how to trade FM70 as well. Now, the second key takeaway is about two key things about futures trading. First thing you need to know is about your profit and loss. Second thing is about your buy and sell. So I repeat, if you anticipate the market is going to go higher, then you buy. If you anticipate the market is going to drop, you just start by selling. And when you hold a futures position, you can hold as short as you like. For example, 5 minutes or even an hour. You can hold as long as you want, maybe for 1 day, 1 month, or even 1 year. You can hold as long as you want. Now, second thing about profit and loss calculation, every 1 point for FKI is 50 ringgit Malaysia and FCPO is 25. So you just need to calculate accordingly. Then the third thing is about the importance of diversification. So today purposes, we only cover in terms of diversifying in terms of return. But if in future we have any opportunity, we are going to look into diversification in terms of risk. So in terms of return, remember, especially nowadays, if you are going to trade one product itself, it's very difficult for you to generate consistent return. So it's very important for you to diversify to different products. So with diversification, you can enhance your return. So if you are currently trading in stocks, try to start to look into futures. For example, you can use something like FKI to hedge your position, or even FM70 to hedge your position. And even in terms of diversification, you can even use FCPO, which they have a very low correlation compared to your FBM KLCI, then it will help you. Now, the final part is winning trading psychology. Remember, the first thing is losses is part of your trading. And when it comes to trading, you need to follow your discipline. Then the first thing is you must have your consistent decision making. Because when it comes to trading psychology, we notice that people are facing with this whole issue because you're not consistent, especially when it comes to your decision making. Sometimes, as I mentioned, today my mood not so good, I go and sell everything. If today my mood is very good, I go and buy. So these are 4 key takeaway points. Now, subsequently, I'm going to show you some things that you can kickstart at home. Even right now, if you're watching, you can start to scroll over to your Google Chrome. You just need to go and type in bursamarketplace.com/market/DTS. Now, later I'm going to show it to you 1 page, then only you take photo. Don't worry, if you need to take, I'm going to show it to you. Then, you can see that they have this, what we call as derivative trading simulator, meaning you can simulate. You can start by using a simulator to understand how to buy, how to sell, how to calculate a profit. Then once you are more confident, that only you open your futures trading account, that only you start to trade. Now, how to use this platform? I'm going to show you the steps. The first steps is you go to bursamarketplace.com/mkt/DTS. Then second steps, you just need to click start. Then the third steps, you're going to fill out this form. A few things, few information that you need to fill out. And this is provided by Bursa Malaysia itself. So you can provide the information. It's very safe. And this particular platform is valid for 30 days because there's no reason for you to keep on doing simulation. So technically, you just need to open, then you start within 30 days, you familiarize yourself with the platform, you know how to buy, how to sell, how to calculate your profit and loss, how to create your strategies, etc. Then definitely don't waste your time into this simulation because you are not going to make money buyer here. You are going to start in the actual trading environment. Then contact the brokers to start your trading. Now I'm going to show it to you. Before I move to the next slide, maybe I give you 2 seconds, just take a photo. You can take a photo, then later you can simulate by yourself. You can do your exercise by yourself. Good? Now I'm going to show it to you. This is the simulator. But before that, let me share another page. Can you see this BURSA marketplace? I believe you all can see that, right? So the same thing, I'm going into the bursamarketplace.com, then /mkt/dts. You just need to scroll down. They will give you all the explanation, the features. Then they even have the video to guide you through exactly how do you kickstart, how do you place your orders, etc. Then how do you use the training platform? Because this training simulation platform is similar to the actual training platform, but it depends on the which platforms that you are using. But more or less, they are the same. So whatever you learn here, you can apply in the actual training platform. You just need to go through the video, not very long. Each video is about 10 minutes on average. Then there are even some frequently asked questions. You can go through this all. Then you can start anytime. Now I'm going to share with you the platform. I just run through a very quick one. At least you understand how are you going to do your question, not question, how are you going to use it? I'm so sorry, I shared the wrong thing. Let me share the screen for this. This is their simulation platform. So once you fill everything, you download the apps, then you are going to see this particular page. I believe you all can see that, right? Now let me move my screen a bit. At least I'm going to show it to you. Now at the bottom, so we have the quotes screen, very simple. We have the quotes, we have the order status, then you have your field orders, you have your position. Later I'm going to show it to you. Now yesterday I did some trades. I'm going to share it with you. How do you do it? Then your portfolio meaning your profit and loss. So I'm going to show it to you exactly how you're going to do. But because today we do not have market, today is Saturday, that's why you can see that the bid and ask price is quite far away. Can you see that? So can you see at the top, this is your FKRI. Your top part, this is your FKRI.
Yeah.
Then you can see, right? Then your bottom here is your FCPO. As I mentioned to you, if you do not know which contract months to trade for FKR, you just trade spot month or just search for the highest volume. Just remember this keyword, search for the highest volume. You go and trade, you will not be too wrong. So FCPO, we are going to trade for the third month. Now, how do you place an order? For example, a simple one, if I'm going to trade July, I just need to click. So once you select this, can you see automatically in your order ticket, they already show it to you. This is which month. Then the quantity you can key in by yourself, or else I just click one contract. I'm going to start with one contract. If I anticipate the market is going to go higher, then I'm going to buy. So let's say if I'm going to take the seller directly, so I'm going to select 1526. So what I need to do is I just need to click buy. If you want to sell, you just need to click sell. Can you see that? So let's say if I'm going to buy, I just need to click buy. But because today we do not have market, even I click buy, they will tell me there's a pop-up screen to confirm your trade. Then you double check whether is it correct or not. Then you just need to click buy. But because today we do not have market, that's why it cannot reflect. If not, they will show that if you are going to buy one contract, this additional margin would be 4,200 because FKR right now per contract is 4,200. If I'm going to trade FCPO, it will be 6,000. So if you confirm you want to go with it, then you just click buy. But I believe today is Saturday, you cannot. But even you cannot, can you see that actually it reflected as rejected? And they will give you the reason why they reject. So you can scroll to the back, you can see what is the reason why they are rejecting your orders. But if it is successful, they will show here. So I'm going to show it to you what I have done previously, yesterday, just to show it to you exactly how do you do that. So can you see that right now I have a CPO contract, I have a FKI contract as well. I purposely, one products I do short, another products I do long. At least you understand how it works. So let's say if I anticipate CPO products is going to go higher. That's why I long yesterday morning. So when I long, the price is 3780. But subsequently, the market settled higher. So I'm making more than 100 over points. That's why I got an unrealized profit of 2008. Can you see that? Now, the same thing. If I anticipate, let's say, our FKI is going to drop, so I start by selling. Can you see that my net position is short? I'm doing July contract. My FCPO, I'm doing September contract, the third month, right now the third month. So right now, because I shorted at 1503, then subsequently the market settled at 1521, and I'm having a loss. So both profit and loss, you can see exactly how it works. And one is long, one is short. So for example, if I'm going to close my FKI contract, then I will need to buy back. Because I start by selling, then I will need to buy back to close my position. Now, the same thing, if I'm going to close my FCPO contract September, because previously I'm long, I will need to short the position. Then I can close my position. So anyhow, when you go back, when you start to download the trading simulators, you can start to play around. And if you cannot understand, as I mentioned to you previously, they have the video to guide you through step by steps. You don't worry about it. This one is just for your understanding. Then another thing, we are going to look at portfolio. Can you see this initial margin requires 10,200 because I own one FKI contract. So one contract FKI is 4,200. And at the same time, I also own another contract of FCPO. It doesn't matter how many contracts you own, you calculate accordingly. So one contract FCPO is 6,000, one contract FKI is 4,200. So in total, my initial margin required is 10,200. So this initial margin is another jargon. In short, this initial margin is like a deposit. I give you an example. Today I buy a house. Do I need to pay a full amount? No, I don't need. For example, I pay a deposit of 10%. So if this house worth 100,000, I pay 10%. I just need to pay 10,000. That is what we call it as a deposit. So this initial margin is, as a layman terms, is also called a deposit. If I trade one contract FCPO, I pay 6,000. If I trade two contracts, I pay 12,000. If I pay one contract, I trade one contract FKLI, I pay 4,200. If I trade two contracts, I pay 8,400. Now, the same thing, if I'm trading FM70, I pay 2,500. So this is being fixed by BURSA Malaysia Clearing House, and you just need to understand. So this account, every account, you're going to start with 100,000. Then you minus off, can you see that I got the open trade, which I have an unrealized profit, which is 1,875. So this is my current total balance. I believe very simple for you to understand, but don't worry, you just need to jot down. I'm going to share with you again the slides. This is the slides that you need to take a note. Just take a photo. Take a photo for this. I give you 10 seconds to take a photo. Go back, start with your training simulation. Only with training simulation, you are going to achieve very good results in your actual training environment. And you are very lucky. Last time, our generation, we don't have training simulation. And without training simulation, anything that we like to test, we need to execute with the actual money, the real money. So normally you're going to suffer losses, but you are very lucky because BURSA Malaysia prepared this simulation platform for you. You just need to go and download and you just follow the step. Okay, I pass it back to Hero.
Okay, thank you, Ting Ting. So there are some questions rolling down in the Q&A box. So can I ask a question, Ting Ting, on behalf of the audience?
Sure.
So as FKLI opens 15 minutes before KLCI, FKLI open price will be the last close price yesterday of KLCI, is it? If not, please explain.
Okay, very good question. Now, it doesn't mean that it need to be. I give you an example. Certain stocks, let's say, for example, stocks A. I'm not going to mention any stocks. Let's say these stocks yesterday closed at $6. Does it mean that the next day the stocks need to open at $6 as well or not? I believe your answer is definitely no, because when we sleep, let's say when the market ends until the next day before the market start, there's certain information being released to the market, or there's certain things happen in foreign market, let's say in US. It will impact how our stocks is going to open. The same thing. It doesn't mean that FKR today opening need to be similar as yesterday closing, because overnight we have other market while we are sleeping. Other market, they are still trading. We have US market. Let's say your US, they drop 300 points. It will impact our FKR as well. So if let's say US drop 300 points, our FKR, maybe there's a gap down. So it doesn't mean that it will be similar.
I see. Thank you, Ting Ting. And because we have 5 minutes before the end of sessions, but I would like to take one more questions from the list. Can explain order type?
Oh, this order type is a very lengthy question. Let me try to explain a very quick one. You just need to understand and remember, you just use 2 order types. One is limit orders, one is stop orders. The rest you don't need to use. Majority of the platform, they provide you with 4 order types. One is limit, stop, market, and stop limit. If you are beginners, just start with limit and stop orders. Limit orders is normal, you buy and sell. I believe if you're trading in stocks, very common for you to come across with limit orders. How to buy, how to sell, you already know. Stop orders is for you to cut loss. This is a must. When it comes to trading products, cutting losses is definitely a must. So stop orders is for you to cut loss. Now, market orders, if you're beginners, personally, I don't advise you to go with that because you're taking the market directly. Sometimes you select the wrong one, or you look at the wrong one, right? Then you might have a huge losses. So I will advise you to start with limit and stop orders. Now you can go and Google search or else. Now, maybe let me share this. BURSA Malaysia, beside this BURSA Marketplace Virtual, we also have a series of webinars and online workshops that you can join. So for example, if you are going to join with different topics, you can join the webinars provided by BURSA Malaysia. We are going to conduct in 3 different languages, English, Malay, and also Mandarin. Then you can see upcoming, for example, next Tuesday, we have the trading for a living, 3 categories of professional traders. So let's say if you are in the target of you're going to become a full-time traders, what are the categories available in the industry itself? You can go and register accordingly. What you need to do is you just need to scan this QR code. You can register accordingly. Now, besides that, for those, especially just now you asked the question like, what are the different order types? What are the difference? You can go and join this online workshop. Yeah. Workshop is not only physical, it can be online. So this online workshop, what does this mean is we step by step, starting with 0, we teach you until you can trade the first contract. So this online workshop is only for serious traders who want to venture into futures. You go and join. If you do not have the intention, don't simply go and register because every class is full house. So just go and join. We start with the basic one until you can start to trade. So in this particular online workshop, we will cover, for example, different order types. How do you use the order types? We even have trading simulation as well. How do you execute your trades? This all will be covered inside the online workshop. So you can see that we have 2 sessions. So online workshop 1 and online workshop 2. The first session is the basic to kickstart. Second session is about risk management and also trading plan. Just now we already highlighted in terms of trading plan, and you can select either session because one is from 9:30 to 12:30, another session is 2 to 5. Some of you might be working on Saturday morning. Am I correct? So if you cannot make it for 14, you can make it for the afternoon session. But if I'm not mistaken, 14 and 15 already full house. But subsequently, we still have a few online workshop lined up, so don't worry about it. You can go and register accordingly. I believe I answered that question, right?
Yes, thank you, Ting Ting. So I think it's we are very close to the end of sessions. Wonderful. It's a weekend. I would like to say thank you to the fantastic audience here today and also a fantastic speaker today, Ting Ting.
Thank you very much, Hero.
So after 5 days of work from home with screen, you all still have the patience and persistence in learning new things together with us today. So wonderful, a big round of applause to every one of us. So feel free to drop us a message at futures@bursamalaysia.com if you would like to find out more about our product and services. All right, once again, a big thank you to Ting Ting and the audience. Happy weekend, everyone. Stay safe and see you again. Thank you.
Bye-bye.
Bye-bye.
Hello everyone. My name is Iman from CIMB. So today I'm going to share with you how to choose a structured warrant. So before I go and kickstart this session, just let me show you the disclaimer first. So I will give you about 10 seconds here. Okay, so today I'm going to share with you about structured warrant. So first of all, I want to thank BURSA Malaysia team for giving me this opportunity to share with all of you here the skill and the knowledge on how to select or how to choose a structured warrant. But before I go further and guide you how to choose a structured warrant, we need to learn those basics first, okay? And I believe most of you heard a lot of myth, okay, or story about structured warrant from your friend or relative, your uncle, aunties, right? So, and maybe you have paid some so-called tuition fee, okay, to learn how to invest in stock market and of course in trading stock. But to me, right, whether you can make profit or not with your investment in stock market, it depends very much on when you buy and sell the stock. Same goes to trading in structured warrant, all right? So the things that you need to learn is you need to understand the fundamental of the underlying security. And also you need to learn how to do technical analysis in terms of trading stock. Then if you have both of this knowledge, right, it will help you to make a better investment decision when it comes to trading in structured warrant. So let me show you, okay, the basics of structured warrant first. Okay, what is structured warrant about? Okay, why actually CIMB Bank like us issue structured warrant? Okay, this is because structured warrant is a leveraged financial security, okay, which provide exposure to the underlying security for a fraction of the underlying security price. So for example, let's say you do not have enough capital to buy a stock like Maybank or Top Glove, okay? But what you can do is you can choose to buy the call warrant, okay, which will mirror the share price, okay, the trading movement of the underlying security. So what kind of underlying security that we can issue warrant? Okay, first we can issue warrant on single stock, okay, the mother share, and also we can issue warrant on ETF, although it's not that popular in the market and we are not issuing any warrant on ETF right now. We can also issue warrant on index. So the most popular index warrant you can see in the market right now is KLCI and also Hang Seng warrant, okay, or a basket of shares. Instead of we track one underlying share, okay, this warrant can track multiple shares, okay, mostly is in the same sector. So what types of structured warrant do we have? The most famous structured warrant now in the Malaysian market, of course, is the call warrant. So call warrant price will actually increase when the value of the underlying security price increase. So when the mother share price start moving up, then the call warrant price will move up as well. Okay, just simple as that. And the another one is put warrant. Put warrant, okay, will increase, the price will increase when the value of the underlying security decreases, okay? When the stock price goes down, then the value of the put warrant will go up. So let's say you are expecting now, because recently the market is a bit bearish, so you are preparing yourself for the next bullish trend. And when you think the next bull market is coming, so what you can do is you can look for call warrant. Okay, so these are the two types of structured warrant that you can consider when the market up and down. So in terms of exercise style for structured warrant, we have two types of exercise style. The first one is American style, and the second one is European style. So what are the difference between American style and European style? The first one is, let's look at European style. For a European style warrant, okay, we can only exercise this warrant when it is on the expiry date. Whereas for American style warrant, we can exercise this warrant anytime, okay, within the tenure of the warrant. So these are the difference between American style and European style warrant. So in the market right now, all CIMB issue structured warrants. Okay, we are actually issue on European style, okay, structured warrant. So what is actually the moneyness? When you look at or you compare structured warrant at that time, right, you will see a lot of moneyness, the percentage of the warrant. But moneyness actually does not mean the profit that you will get or the profit that you will get for when you are holding the warrant until the maturity date. Okay, the moneyness is actually describe the intrinsic value of a structured warrant. Okay, for call warrant, when we talk about in the money warrant, it means that this warrant is actually the underlying share price now is higher than the exercise price of the warrant, of the call warrant. Okay, so if it is at the money warrant, okay, then the underlying share price is currently equal to the exercise price. If it is out of the money warrant, it means that the current share price is lower than the exercise price. So for example, let's say this call warrant have a exercise price of 1 ringgit and the current share price is 1 ringgit and 10 cents, then this warrant is deemed in the money. So that is what moneyness about. And put warrant, okay, in the money is in the opposite way. Okay, when the share price is lower than the put warrant exercise price, then this put warrant is deemed in the money. At the money is the same with the call warrant. And when the put warrant is out of the money is when the underlying share price go higher than the exercise price. So a structured warrant, right, will only have the intrinsic value when it is in the money. Like for example, just now I gave, right, the example I gave is the share price is 1 ringgit and 10 cents and the exercise price is 1 ringgit. So how we calculate intrinsic value of a warrant is we use the underlying share price minus the exercise price and divide the exercise ratio. So let's say the exercise ratio is 1 to 1. So in this example, the intrinsic value of a warrant is 10 cents. You won't be able to see any intrinsic value if let's say the money is, the warrant is at the money or out of the money. Because if let's say the warrant is at the money, 1 ringgit minus 1 ringgit, the intrinsic value is equal to 0. So this is what you need to know at the moment. Now, let us look at what influences the prices of structured warrant. Okay, a lot of investors, they thought that the price of structured warrant is actually being affected only by the underlying share price, but that's not true. Because other than the underlying share price, right, the structured warrant also being influenced by volatility, dividends, interest rate, and tenor of the warrant. So when the underlying share price goes up, you can see that the call warrant price will go up and put warrant price go down. Okay, this is very direct impact to the warrant price. When it comes to volatility, right? Okay, when the volatility start going up, both this call warrant and put warrant price will go up as well. Now, when we talk about volatility, right, it is representing in percentage. Okay, so when a stock become more and more volatile, then the volatility will be higher. So when you are comparing Tenaga, where the share price is a bit flat or a bit stagnant, and you're comparing another stock which is more volatile, like the glove sector, maybe like Top Glove, then the volatility of Top Glove will be higher. But when we are selling warrant at that time, right, if let's say we price in when the underlying is much more volatile, then the call warrant and the put warrant price will be higher, because when the share price is much more volatile, it also means that the share price will go either extremely up or down. Okay, so the warrant price will be higher. In terms of dividends, when we price in the dividends into the warrant price, right, the more dividend this underlying company been paying in historical dividend, okay, then the call warrant price will be lower. Okay, and when we price in more dividend into the warrant price, right, for put warrant, it will increase. This is because when it comes to let's say ordinary dividend, right, when it comes to the X date for this dividend for the underlying shares, the share price will go down. Okay, when it comes to the X date, it will adjust it lower. That's why the call warrant price will go down. Now, when we talk about interest rate, here is the risk-free interest rate. So when interest rate goes up, the call warrant price will go up and put warrant price will go down. In terms of tenor, okay, the tenor can only be declining, okay? It cannot increase. So the tenor, when decline, okay, the time value of the structured warrant, either call or put also, will go down together. So these are the 5 main factors that will influence the prices of structured warrant. But I also understand that sometimes some of the investors, they will ask like, Iman, I'm comparing warrant A and warrant B. But how come the warrant B price move faster than warrant A? Okay, but before I answer you this question, right? So you need to look at this question here. Which of the following warrants are more sensitive to the changes in the underlying security price? Okay, so you are comparing in the money warrant, at the money warrants, and out of the money warrant. So the answer is the first one. Deep in the money warrants, right, will actually be more sensitive to the changes in the underlying security price. Okay, so a shorter tenor deep in the money warrant, okay, are more sensitive to the changes of the underlying price in terms of absolute terms. When we say absolute term, it means in terms of the value. Okay, so when the share price move up 1 cent, a deep in the money warrant, okay, it will also move up like 1 cent, okay, in terms of value. So you will see more clearly in this diagram here. Okay, so this is the payoff diagram of a call warrant. So the put warrant will be in the opposite way. Okay, so you can see the warrant moneyness here and also the sensitivity. When the share price start moving up, right, the warrant price, okay, the curve here will move more steep and steeper. Okay, but when it is set out of the money, even when the share price move like 5%, the warrant price may not move much. All right. So for example, let's say the exercise price of this warrant is set 1 ringgit. Okay, and then the current share price is 2 ringgit. And another warrant you are comparing is the exercise price is also, I mean, same exercise price, but when the underlying share price is lower than the exercise price, right, the warrant price will move slower, okay, when you compare to a very deep in the money warrant. Okay, so this is why when you choose a warrant, that time you need to be aware whether it is a far out of the money warrant or not. Okay, so if you are buying a far out of the money warrant, then of course the warrant price will move slower compared to a deep in the money warrant. Okay, so before you invest in structured warrants, right, you need to know also what are the key risks. Okay, so the first one that you need to remember is warrant will have a limited lifespan. Okay, so all structured warrants have a finite lifespan and it will expire on a specific date. So you must always check, okay, when is the expiry date of the structured warrant before you buying it. So the second risk is the credit risk. When you buy warrant that time, right, when you hold until maturity date, you also need to make sure that the issuer will be able to pay you back the cash settlement amount if, let's say, the warrant is in the money. All right, so you need to check what is the credit risk or the credit rating of a issuer. And the third risk that you are having is the market risk. The price of a structured warrant, right, like I explained just now, is actually affected by many factors. Okay, not just the changes in the underlying share price. And also, if the warrant, the underlying security of a warrant is a foreign stock, then it will also be influenced by the FX rate changes. Okay, other than that, just now we mentioned is the volatility and the interest rate. Okay, although interest rate, we won't see so much changes, but when we are in the increasing interest rate trend, right, then you will see some impact. And also the liquidity risk. The liquidity risk that we are talking about here is that when a warrant holder is unable to sell his structured warrant back, okay, when the liquidity provider is not in present. So to CIMB, we always ensure that we will quote a very tight bid-ask price spread for all our warrant. But sometimes you will notice that the bid-ask spread of certain warrant is not tight enough. Okay, that also because some of the underlying, okay, some of the mother share, if let's say the bid-ask price is wide, right, then the warrant bid-ask price will also follow the liquidity of the underlying share. Okay, so these are the 4 key risks that you need to remember when you are investing in structured warrant. Now, the next thing I want to talk about is what actually you need to know when a warrant is expiring. So you need to remember that the last trading day of a structured warrant is the second market day prior to its expiry date. Okay, which is like easy for you to remember. To remember is T-2 from the expiry date itself. So a cash settled European style structured warrant will be automatically exercised on the expiry date. Okay, and if let's say the warrant is in the money, right, then the warrant holder will receive the cash settlement amount within 7 market days from the expiry date. And we also encourage all investor or warrant holder to register e-dividend. This is because then we can actually pay the cash settlement amount directly credit to your registered bank account for the e-dividend registered bank account instead of sending check. Because sometimes when we are sending checks, right, some of the investors, if let's say their area, they may not be able to receive the check that fast. Okay, so there is a problem for them to also cash in the check or deposit the check, okay, at the bank branch. So actually you are encouraged to register e-dividend, okay, so that you can receive the cash dividend directly to the registered bank account. But one more thing I need to highlight is that this is only applicable if let's say your CDS account is a direct account, okay, but if let's say your account is under nominees, then we will actually pay the cash settlement amount to your nominees. Then your nominees will distribute back the cash settlement amount back to you. So it may take some time if let's say you are a nominees account holder. Okay, so the key thing is how actually the issuer calculate the cash settlement amount of a structured warrant. So this is the formula of calculating call warrant and put warrant cash settlement amount. The main difference is you can see, okay, we highlighted here, which is for call warrant, we are using closing price or the closing level to minus the exercise price or exercise level. But for put warrant, we are actually using the another way around, which is exercise price minus the closing price. So the key part here is you need to know how the issuer determine the closing price or the settlement price, okay? So in this whole formula here, okay, you actually know all the factors. Okay, the only things that you don't know is how actually we calculate the closing price or settlement price when it comes to expiry. Okay, so let me show you. Okay, the first method, right? In the market right now, we have 3 methods to calculate the settlement price or the closing price. So the first method is for a single stock, right? We are using 5-day reward price of the underlying security immediately before the expiry date. So simple term is that we use 5-day reward price, 5-day average reward price of the underlying share before the expiry date. This is not including the expiry date itself. Okay, so it's T-5. So the second method is the issuer can use 5 days average closing price of the underlying security immediately before the expiry date. Instead of using reward price, okay, the issuer can also just based on the 5-day average closing price to determine the closing price, okay, to calculate the cash settlement amount. The third one is to use the closing price of the underlying security on the market day immediately before the expiry date. So it's the closing price, okay, T-1 of the closing price of the shares. Okay, in the market right now, in BURSA market right now, okay, we can see most of the issuer are using either A or B. For CMB, we are using the A method, which is the 5-day average reward price of the underlying security to calculate the closing price or settlement price, okay, for the when the warrant comes to expiry. But you need to be very careful on how the issuer calculate the cash settlement amount. This is because it may impact the cash settlement amount if, let's say, you do not aware how the issuer calculate the cash settlement amount, right? This is because if you look at the 5-day average closing price, right, sometimes you will notice that when it comes to the closing price or the closing session that time, right, some of the investor, maybe because of the major shareholder or some institutional investor, okay, when they sell bulk of shares to the market, okay, it will press down the closing price. Okay, so to be fairer to the investor, okay, I would think that using 5-day VWAP price is much more fairer to the investor. So before you buy any warrant at that time, make sure you check how the issuer calculate the cash settlement amount. Okay, so the next thing is we want to know how actually the issuer determine the closing level. If let's say you are buying a index structured warrant, let's say you buy KLCI or Hang Seng warrant, right? So the first method is we can use the closing level of the underlying index on the market day immediately before the expiry date. Okay, this is talking about the cash index. Okay, and the B method is the issuer can also use the final settlement price, settling the corresponding index futures contract on the expiry date. So the B method, okay, instead of using the cash index, we are using the futures contract as a reference, okay, to calculate the closing level. So the third method is the issuer can also use the average of the closing level of the underlying index for the 5 market days prior to and including the market day immediately before the expiry date. So for CMB, we are using the first method to calculate the index, the B method to calculate the KLCI and also our Hang Seng warrant. Okay, it is based on the spot month index futures contract. So now this is the key part: how to choose a structured warrant. A lot of investors here, I think you will want to pay attention to this topic because I hope that what I'm going to guide you next, okay, can help you to make a better investment decision, okay, so that you won't need to pay too much tuition fee. Okay, so the first rule, okay, we actually summarized a few rule of thumb for you to use as a reference. So the rule number 1 is always remember that don't ever buy a structured warrant if let's say you don't like the underlying security, or if let's say you do not expect this underlying security to perform well, then you don't look at the core warrant. Some of the investors, they like to buy warrant because of their friends asking them to buy or their relative is asking them to buy. Okay, they never really go and study what this underlying security is doing. So always remember the first rule. So after you know what are the underlying security that you want, okay, that you are looking to buy for a core warrant, the second rule is choose the issuer that have the following criteria. Okay, strong credit rating, established local presence. Okay, so in case you do not receive any of your cash settlement amount, either credit to your bank account or you do not receive any check from us, at least you can go to the nearby CIMB bank branch to inform our colleague so that our colleague will also route your issue back to us, right? So this is why also if the issuer, you need to make sure the issuer have an established local presence and also a proven track record as an issuer. So the rule number 3, okay, is that when you compare warrant at time, right, a lot of warrant at time, you need to make sure that the warrant that you're comparing is the same underlying security. Some people, they call me asking me, should I buy Tenaga C1 or Top Glove C1? Which one is better? You cannot compare apple with orange, right? So make sure you always compare warrant with the same underlying security, which have the similar moneyness. Okay, and also tenor. So the rule number 4 here is you pick the core warrant with the lowest implied volatility. So after you select a series of warrant that have the similar moneyness and tenor, then you pick the core warrant or the structured warrant with the lowest implied volatility. I will talk more about implied volatility later on. Okay, so this list is for you to use as a reference, a general guide. So if let's say you have any other preference or you want to add in to this rule of thumbs, right? Of course, you can do so, okay? So let's look at some technical terms when you are buying warrants, okay? Some investors, they will always buy warrant with a lower premium because they thought this is cheaper. But it is not, whether a warrant is cheaper or not, right? It is not like determined by the premium. What the premium is trying to tell you is just measuring the cost of purchasing an underlying shares through the warrant compared to buying the underlying share directly. Okay, so let's say the underlying share price now is at 1 ringgit. Okay, and also you buy a warrant of exercise price 1 ringgit, and the warrant price is 10 cents. Exercise ratio is 1 to 1. So when you add this up, okay, the front here is 1 ringgit and 10 cents minus the current share price 1 ringgit, you get 10 cents, and you divide by the underlying security price here, which is 1 ringgit, you will get 10% premium. So it only tells you that you are paying 10% premium to gain an exposure to this underlying security through a warrant, but it doesn't really tell you that you're buying a cheaper warrant or not, okay? So is a warrant with a low premium a good buy or not? It is not true. If let's say you are buying a warrant with a low premium and the warrant is going to expire soon, like in a week, okay? So because in a week time, there will be a lot of changes to the underlying share prices as well. So you may not know, okay, whether this warrant will expire in the money or not. So you should not buy a warrant because of a low premium. Okay, so in this question here, okay, you should buy a warrant, okay, with a premium of 5% and a 1 year to maturity, instead of buying a warrant with 1% premium and 1 week to maturity. Okay. So the next technical term that we want to learn is gearing ratio. Gearing ratio is a layman term to denote the leverage exposure of a structured warrant to the underlying share price, to the underlying security. So a lot of investors, they like to buy warrant with high gearing because they thought warrant with high gearing, when the mother share price move 1 cent, the warrant with the high gearing will also move like multiple times, but it is not true. Okay. So gearing ratio is only measuring, okay, the underlying price that you pay divide by the warrant price multiply exercise ratio. So let's say the underlying price, okay, same 1 ringgit, and the warrant price is at 10 cents. The exercise ratio is 1 to 1. Then this warrant is having a 10 times gearing, okay, but it does not mean that it gave you a 10 times return, okay, at the end of the day. Okay, because high gearing warrant is always associated with a far out of the money warrant that will expire soon. Because it is far out of the money, like the warrant price is only 1 cent, okay, that's why it looks cheap and it makes the gearing ratio looks higher, okay. So what actually professional investor or trader is actually looking at is the implied volatility, okay. Implied volatility is a function or a figure that factor in all the factors that we need to price a warrant, okay, such as when we price a warrant, we need to know what is the underlying share price. We will need to determine what is the exercise price, exercise ratio, and we know the interest rate. We also know the expected dividend because we will check back the historical dividend of the underlying shares. And we need to determine when is the expiry date. The last thing we need to know is the volatility. Okay, so after we put in all these factors, right, then we will come up with one warrant price that we need to sell in the market. But when it comes to reality, right, because the warrant already listed in the market, you already know what is the warrant price and all the factors. Okay, but usually you wouldn't know what is the implied volatility if you are looking at your trading platform, okay, because usually this our trading platform, we don't show the implied volatility. So this is the key part that you need to find out before you're buying a structured warrant. So let me give you an example here. Okay, we have 4 top-level warrants here. The data is as of 19 May. Okay, quite recent. So you look at all 4 warrants here, right, with different moneyness, gearing, and premium. So if let's say we don't calculate the normalized warrant price rate, you would think that top-level C1F is actually same price, looks like it's the same price with top-level C1D. But always make sure that you normalize the warrant price, which is to also factor in the exercise ratio. Okay, so after you comparing, then you will notice that top-level C1T has a lower normalized warrant price. In terms of tenor, top-level C1C is actually longer tenor, and gearing-wise, top-level C1D has a higher gearing, and premium-wise, top-level C1D has a lower premium. In terms of moneyness, also top-level C1D has a lower less out of the money. So when you are comparing a lot of warrants at time, right, and you are looking at all this data, right, it will make you confused. Okay, sure, you will get confused. Okay, because even professional trader looking at all this data also, they will get confused. So what actually the professional trader or the issuer like us, we will only pick a warrant with the lowest implied volatility. Because if, let's say you don't see this implied volatility in your screen also, right? You look at the normalized warrant price, right? You notice that the warrant with the highest implied volatility also is having the highest normalized warrant price. But make sure when you want to compare a series of warrants, few warrants together, right? Make sure the rule number 3 that we mentioned just now, pick those warrants with similar moneyness and also similar tenor, all right? So why actually we want to use implied volatility to determine which warrant to buy? So this is another example with a result. Okay, so this example is top low C61 and top low C55. You can see top low C55 is actually in the money, okay, because the share price now is 4 ringgit 65 cents, but top low C68 is slightly out of the money. But when you look at normalized warrant price, right, a out of the money warrant is more expensive than a deep in the money warrant, which doesn't make sense, and it actually show in the implied volatility also. So when come to the expiry date, both also is having the same expiry date. The closing price of C61 is a bit different than C55. This is because the top low C61 are using a different calculation method to calculate the closing price or the settlement price compared to C55, all right? So you have different outcome. This is also why just now I mentioned that you need to know how the issuer calculate the closing price, all right? So you see the outcome can be very different, okay? Top low C51 give you a return on investment of 251% compared to top low C61, 146%. So this conclude that the attractiveness of a warrant strike can actually be determined by its implied volatility. So you don't actually need to compare like gearing or premium to determine which warrant to buy. Okay, you just pick those warrants that with similar moneyness, okay, and same tenor. Okay, then just look at the implied volatility. All right. In this table also, we also see why if you are expecting the share price to move up that time, right, you should consider call warrant. Okay, because if let's say you're buying the mother share top left, the ROI that you get is only 20.5%. Okay, but top low C55, okay, give you more than that. Okay, way more than that. So common question that we have on structured warrant. Okay, usually a lot of people, they misunderstood the role of a market maker. Okay, they will call me or my colleagues, okay, to say that, Iman, can you support or push up or down the warrant price? But we cannot, okay, because the role of the market maker, right, is actually to provide liquidity, okay, to the structured warrant by quoting the bid-ask prices to this warrant with adequate size and minimal spread, okay. So market maker are usually the structured warrant issuer, or some issuer also, they can appoint another third party to become the market maker of the warrant. But at the moment, CIMB is the issuer, and we are also the market maker of all our warrant. So the second question, would you lose less buying a deep in the money call warrant? The answer is no, because just now I show you the payoff diagram. You can see that when a deep in the money call warrant, it will react more sensitive to the changes of the underlying price. All right. So when the underlying price moves down, okay, it will also be the same. Okay, in terms of value, it will lose a lot more compared to a out of the money warrant. Okay, so a deep in the money warrant, when the share price tank, right, it can drop from like, let's say 50 cents per warrant to 20 cents per warrant. Okay, but a far out of the money warrant, maybe you buy at 2 cents, but when the share price down 10%, this far out of the money warrant maybe drop like half cent. So it is not true that buying a deep in the money call warrant will lose less. Okay, so if you want the warrant price to be more sensitive to the changes of the underlying share price, then you look for the very deep in the money call warrant, and you pick the one that with the lowest implied vol. Okay, so the third question, are cheap warrants attractive? This is another famous question that we have because a lot of investors, they like to buy half cent or 1 cent warrant. Okay, because when the 1 cent warrant move to 2 cent, okay, then they will make 100% profit. But you need to ask, right, what is the moneyness of the warrant? If let's say it is 30 or 40% out of the money, and it left only like less than 1 month to maturity, do you think the warrant will become in the money? If let's say it is not, right, then this 1 cent that you are paying most likely will become worthless. That also explains why some of the investors say that call warrant always expired out of the money, but that is because you are buying a far out of the money warrant. Okay, so you need to take note on this thing. So do most structured warrants expire out of the money? Like I mentioned just now, it depends on the performance of the underlying share. Okay, the issuer cannot really like influence the underlying share price because you need to know that in the market, right, there are a lot of investors in the market. We have a foreign investor, okay, institutional investor, okay, that are in the market. So if let's say the warrant is expired out of the money, okay, that most likely because you are buying a far out of the money warrant, or you are holding a warrant from in the money until it become out of the money. So in investing in structured warrants, right, you need to have a very clear strategy when to go in and when to go out. Okay, so does corporate action affect structured warrant? Yes. So corporate actions such as bonus issue, share split, share consolidation, capital repayment, and right issue. For this corporate action, we will actually adjust the exercise price and exercise ratio of the structured warrant so that this corporate action will not have an impact to the warrant price. But if let's say it is a special dividends, right, then we need to determine whether this special dividend, okay, will affect more than 2% or more of the exercise price and exercise ratio being changed. So if let's say it is a special dividend, then on the come date itself, we will do a calculation and make an announcement whether we need to adjust the exercise price and exercise ratio of a structured warrant or not. Okay, but you need to take note that when we adjust the exercise price and exercise ratio rate for all this corporate action and also special dividend, but we will not adjust the exercise price and exercise ratio if let's say it is a ordinary dividend, okay, whether in the cash dividend or share dividend. This is because like just now I mentioned, right, when we price a warrant that time, we already factor in the dividend in the warrant price. Okay, so you actually not really losing out on this ordinary dividend. If let's say we don't factor in the ordinary dividend in the warrant price, right, then the warrant price will become higher. So you will be buying at higher price. So when we do pricing that time, right, we will actually factor in the ordinary dividend, okay, into the warrant price. So instead of selling you at 10 cents, after we factor in the dividend of 1 cent, we are selling you the warrant at 9 cents. So you are not worse off in this case. So is it important to know the issuer? Yes, because you need to make sure that the issuer will make payment to you when it comes to expiry. And if let's say the warrant is in the money, okay? So I also prepare some quiz for you to do some exercise, okay? So which type of structured warrant price will increase when the underlying security value increases? Answer will be A, okay? So when is the last trading day of a structured warrant prior to its expiry date? The answer is A also, T-2. So remember that T-2 is the last trading day. So 1 day before the expiry date, okay, you will no longer be able to trade the structured warrant in the market because the warrant will be suspended. So which of the following warrant is a more sensitive in absolute term to the changes in the underlying security price? So it will be B. A dip in the money warrant, always remember that will be more sensitive to the changes of the underlying share price in absolute term, okay, which means 1 cent to 1 cent. But in percentage wise, right, a far out of the money structured warrant may have a higher gain percentage compared to a dip in the money warrant. Just imagine a dip in the money warrant priced at 50 cents And when the warrant price move up 1 cent, right, you only gain like 2%. Okay, but if let's say a far out of the money warrant move from 2 cent, okay, to 3 cent, you are actually making a gain of 50%. So although in absolute term, a dip in the money structured warrant is actually more sensitive, but in gain percentage wise, a far out of the money warrant will have a higher gain percentage. Okay. So number 4, which of the following is not required to price a structured warrant? The answer is C. We don't need to know the trading volume of a underlying, okay, when we do the pricing that time. We just need to determine the exercise price, and we already know the interest rate and also the volatility of the underlying. So a structured warrant price will increase when its implied volatility increase, assuming all other factors held constant. The answer is yes, sir. So even if it is a call or put, okay, both of this warrant, the price will increase when the volatility increase. Okay, this is because when the stock become more volatile at the time, it also means that it is more risky. So the warrant price will actually go up as well. So let me do a summary for you, okay, in this section. So remember that when you pick a call warrant, okay, you need to pick a call warrant which you believe the underlying security will perform well. Unless you are buying a put warrant, then of course you want the opposite to happen, right? The share price to go down so that the put warrant will go up, okay? And secondly, okay, when you compare warrants, right, various of structured warrant, you need to make sure that the warrant that you compare is having similar moneyness and also tenor. So usually what I do is I will compare warrant, let's say the current price is 1 ringgit, okay, the current share price is 1 ringgit. What I will do is I pick those warrant that within 10% up or down within the current share price. Then I will compare the tenor and also filter out. Then I pick the warrant with the lowest implied volatility. Okay, that's how professional trader is doing. So always check why a structured warrant is cheap. Okay, there's a reason why the warrant is trading at half cent and 1 cent. Okay, mostly it's because the warrant is going to expire soon, and also it is far out of the money. Okay, so buying a structured warrant is also not a bet against the issuer or market maker, because most of the time we hope that our investor can make money through trading in structured warrant so that this business can go longer. And don't forget that when you buy warrant, right, the issuer actually need to buy share, the underlying share. So if let's say the underlying share go down, right, okay, and you are buying a structured warrant like just let's say 5 cents, maybe you will lose from 5 cents to 3 cents, you will lose 2 cents per warrant, but the issuer may lose a lot more, okay, because we are holding the share, okay, so the share price may go down from 8 ringgit to 5 ringgit. Okay, we saw this kind of thing happen recently also. So when you buy a structured warrant that time, right, it is not a bet against the issuer. And most of the time, we hope that you can make good profit also. That's why I'm here today. All right. So this is a summary of my session today. So I will go through, while you are looking at another longer version of disclaimer, I will also go through some of the questions. Okay, let's see whether you have any question or not. Okay, one anonymous asking how to convert a company warrant to mother share. Would it auto converted once it reached expiry date? So anonymous is asking whether how actually we can convert a company warrant. Okay, company warrant is a bit different. When you want to convert a company warrants, right, you will need to fill up form and then send to share registrar, okay, to convert it into a mother share. So you can actually do this through your broker. So you just need to contact your broker. Then I think they will give you the form, and also you just need to attach the check together and send it to the share registrar in order for you to convert it to a mother share. But why actually the third party like us issue structured warrant is because we want to give you to gain exposure to the underlying security and with a fraction of the underlying security price. This is the key part why we issue warrant. Okay. And for company warrant, they issue the warrant is because they want to raise fund. Okay. So company warrant, usually you can see in the market, starting with those, let's say top roof dash WA or WB. Those are the company warrant. If you are looking at warrant like top roof dash C1, C2, then those are the structured warrant issued by the party. Okay. It's not related to the listing company. What is the different strategy? What is the Okay, Chu is asking what is the different strategy to buy structured warrant of an index compared to a share that is holding. Okay, I think what Chu is trying to ask is how to determine when to buy a structured warrant of an index compared to a share, right? If I'm not wrong. Okay. Okay. When you buy a warrant under a one underlying share, right? Okay, it is because you are very confident that this share will move to the direction that you are expecting. All right, so then you will buy warrant under this certain underlying security. But when actually you want to buy a warrant under an index is when you do not know which underlying security will do well or perform badly, but you are expecting in overall the market will perform well, like the KLCI will increase or in bullish trend, but you don't know which stock to buy. Okay, but you know definitely that the index will go up. Then you buy, then you will start look at the KLCI warrants instead of single stock warrants. All right, so that's the difference how you can plan which warrant to buy. Like recently, I think the market is a bit bearish, right? So some of the investors, what they do is they are holding a basket of shares. Okay, they already have this basket of share in their portfolio. And if let's say you want to do hedging, okay, you are actually incurring some paper loss in your portfolio. But how you can avoid or make profit when the market is bearish is to consider put warrant and index put warrant. All right. So when you are having paper loss in your portfolio, but you will also make profit in the put warrant, so you can do some hedging. Okay, if you are expecting the bear market is coming. Okay, next question. Is it possible for structured warrant holder and issuer to both make money? Yes, correct. It is possible. And most of the time, okay, when the warrant investor is making profit, right, then the issuer will make profit as well. But there is also some circumstances where the investor is making profit, but the issuer may make losses. This will only happen when the share price suddenly spike up a lot. Okay, then the issuer may make some losses, then the investor will make profit. But in general, when the warrant investor, they are making a profit, the issuer will also make profit. That's why it is not a zero-sum game. All right. Okay, any more questions? If yes, you can put in the question so that I can see what is holding. Oh, Chu is also asking what is holding capital cost in my slide just now. Okay, we are factored in the holding cost is because okay, in this slide, right, with G, we are factored in the holding cost because let's say you are not using this money to buy warrant or buy shares, right, and you put your money into some FD, you are actually earning some interest as well. So when we do investment that time, the period that we are holding this share or this warrants, right, we also need to factor in the holding capital cost. So we are assuming 5% per annum here. Okay, so you can see this is the holding capital cost. Okay, so I also know that like last year, a lot of investors actually making, some of them are making quite a good profit. If let's say you guys are buying those close warrant in March and you are actually selling it in October, or maybe even if you are selling it in June, you should be able to make profit. But whether you can make profit in all your investment or not, right? Like I mentioned from the starting point, it is very depending on you time your entry level, your entry point, and also when you actually going to exit from this investment. So I noticed that a lot of retail investors, they make losses in structured warrant is because they are buying cheap price warrant and they do not know that this warrant is actually far out of the money and going to expire soon. That's why you heard a lot of myth about structured warrant, that a lot of people are losing their money in investment of structured warrant. But if you are a very disciplined investor, you know the fundamental analysis and technical analysis well, right? I believe you can actually improve your investment decision skill, and also in terms of the result, it should be better. That's why when come to trading in structured warrant, always remember the first rule is that don't ever buy a warrant if, let's say, you don't like the underlying shares. Okay, so this is the key. Where can retail investor get implied? Well, actually, we do publish daily warrant digest. You can go to our website and email to us so that you get some daily update. Okay, you can get some daily update of what warrants that we are highlighting for that particular day. So we also put the implied WO inside this warrant digest, or you can also go to some website also. Will the structured warrant price influenced by buying, selling? Okay, Anonymous is asking, will the structured warrant price influenced by buying, selling? Of course, in share market, even if the mother shares, right, it is actually influenced by the supply and demand. So the supply and demand is also one of the key factors that will affect the structured warrant price and also the implied volatility. All right. So when the demand is higher, okay, and the volatility is keep increasing, then that is when you will see the warrant price start moving up. That's why in the table just now, I show you, okay, the volatility, when volatility start increasing, right, the call warrant and put warrant price will both also will be increasing. Okay, here, okay. So supply and demand is also one of the major factors. Can we use technical analysis to enter for a warrant? Cannot. You cannot do technical analysis in a warrant's price chart. You should do technical analysis on the underlying share price chart. Okay, that is because when you buy a warrant, you are actually wanted to get exposure of the underlying security. So you shouldn't do a technical analysis in the warrant's price chart. So this one is also one of the key things that you need to remember. All right, a very good question as well. What is the indicator to pick structured warrant? Okay, I think I'm going too fast. So the key indicator is to, let me summarize again, is to pick a warrant that you like, the underlying that you like, and then pick an issuer with strong credit rating. The key part is compare warrant with similar moneyness and tenor. Then only you pick the warrant with the lowest implied volatility. Okay. Okay, another Anonymous is asking, is warrant structure investment often promoted by my banker? Is the same as this warrant that I'm explaining? I'm not too sure what product that you are looking at. I think that is some different structured product. Okay, so you may need to check with your banker, because structured warrant is actually a listed financial product where you can actually buy, sell through the market. So I don't think your banker will need to promote this to you, unless it is a broker, then that's different. Can you elaborate the calculation for implied volatility for retail trader? The calculation for implied volatility is a very complex thing, but if let's say you are interested, right, to know more about implied volatility, you can actually look for the Black-Scholes model. Okay, so in your Google, you just type Black-Scholes model of option pricing, then you will actually learn more about implied volatility. But I can tell you straight is that it is a very complex mathematic calculation. Okay, it is not something that our retail investor can understand. So, but the key part here is to pick a warrant with the lowest implied vol, because actually you can get the implied vol information. If let's say you cannot get it, then maybe you can call Iman or just give an email to us so that we can help you to check as well. When the, okay, another anonymous is asking, when the underlying stock is limit up, is it possible its call warrant also go limit up? Yes. I think recently we saw one scenario where when the MMC Corp, after a suspension, when they resumed that time, the share price actually hit limit up, and the warrant price also hit, I mean, our warrant also hit limit up in the morning, and also another limit up in the afternoon. So it is possible that you will see the share price is hitting a limit up, and also the call warrant, okay, especially the deep in the money warrant also hit limit up. But it depends. If let's say it is a far out of the money warrant, then maybe it will still move, but maybe not moving that much compared to a deep in the money call warrant. Okay, so any more question? Okay, I think that's it, right? I don't see any more questions from all of you. Okay, another anonymous is asking how to see CMB live metric. Currently, we do not publish any live metric in our website, but we are actually doing some enhancement to our existing website right now. But when you look at some price metric, right, make sure you also read the disclaimer clearly, because if let's say there are sudden spike up of the volatility of the underlying share, then some of the price metric may not be reliable anymore. Okay. Okay, so I think you guys have no more questions, right? I don't see any more questions. Okay. Okay, if let's say you guys have no more questions, so just I want to say thank you for all of you, and especially the BURSA Malaysia team once again, and thank you for your time. If you still have any question, you can always email to us at warren@cimb.com. So I will actually look at your question and answer one by one if let's say you have anything that you are not sure. But I hope that in this session you will get some concept or some idea on how to choose a structured warrant. Okay, I'm sure there are a lot of new investors out there that have never buy warrant before. So I hope in this session, at least I can give you some idea on how to choose a structured warrant. All right. So I will end my session here. Okay. And I will pass it over back to our BURSA Malaysia team. Okay. Thank you, everyone.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Good evening to all of you. I hope all of you are in the healthy positions, or all of you in a good health. Okay. Today I'm going to share with all of you is one technique that I use that is very interesting, but seldom I see people use this kind of technique. All right. Before that, there is a disclaimer. This is only not a buy call or a selling call or sell call, but this is only for the educational purposes. Okay. Before we go further, okay, my name is Haji Zainal Arifin. I am Senior Vice President in the Inter-Pacific Securities. I am a Certified Technical Analyst, MSTA, and also a member colleague of the IFTA, International Federation of Technical Analysts. I am also a full member of United Kingdom of the Technical Analysts, and also MATA, or Malaysian Association of Technical Analysts, and also I am also the principal for the MSTA program. So what's MSTA? MSTA basically is the professional qualification for the technical analysts. Just like, for example, like ACA is a professional for the accountants, but the MSTA is for professional technical analysts. Okay, I have experience in the market. I've been in the market in the stock market for about more than 35 years. So my forte, or I'm expert in technical analysis. So that is what I'm going to share with you today. Okay, and congratulations to all of you. I believe that we are here since this morning. Now it's towards the end. I supposed to speak, become the first speaker. Now I become the last speaker. It's okay, never mind. As long as I can speak. All right. Thank you very much to BURSA Malaysia. That is, to BURSA Malaysia that have this event and invite me to become a speaker. Okay. So today I'm going to talk about beyond the candlestick. I believe a lot of you are very familiar with the candlestick, especially if you use chart to trade. Okay. Okay. Before you do that, okay, let's see. Put it this way. You see, when I was invited to this program, to give a talk to all of you, I was thinking, what kind of what kind of talk or what kind of subject I want to share with this my fellow friends all here. You see. So I asked, what kind of what you want me to talk about? You want it in the elementary or intermediate or advanced? Is it at the middle towards the advanced? Okay, what is it? Okay, never mind. Okay, so I choose this topic because it is available in most of the chart software, but very seldom is used. Usually, I receive the questions about this technique usually from my student who are going to sit for the exam of the MSTA. But very seldom my client asks me about this kind of topic. So that I'm going to share with you this topic, whereby it is very simple and it is very effective. All right. As you see, we are all, if you are all investors, also investors, or as a traders or traders in the stock market. You see. So what we are looking at is that we want to buy now and sell higher later. Whether you're using a fundamental, you're using a technical, we have the same aim. Okay. And the next question is that how are we going to know that we can sell it higher at the later time Or how do we know that we say buy now and then the price will go higher later? You see, one of the or two of the most popular way or popular analysis is fundamental and technical. See, I just brief slightly only. Fundamental, between they look at the company, look at the economy, and look at the sectors, and look at the financial statement, look at their sales or their revenues or their dividend, all that. But technical analysis, they only look at the price and volume. This only two: price and volume. All right. Now, next, you see, what are we looking for? You see, so the question is, what are we looking for? You see, so even if you are a technical or you are a fundamental, basically we are looking at one is trend, second is the support and resistance, the third is the signal or the buy and sell signal. So there are three that we are looking at, especially if we are using the technical analysis. You're searching or you're looking for trend, support and resistance, and also the signal. So the one that or technique that I'm going to share with you today, they have all of these three. Okay, let's see how is it. Okay, one. Okay, this is just an introduction. Technical analysis is is study of historical price using the chart for forecasting the future price. So this they use a pattern and all that. So because we believe that the price quickly reflect all available fundamental of information into the price, and we believe that the history repeat by itself, and we believe that the price at that particular time will show that all the information is already in the price. Okay. And the role of the technical analyst is that to identify or forecast the change of in direction of price trend and determine the timing of action. So what does it mean? Which means that you timing your entry or your exit in the trading. You see that is you have two things. One is price, second is timing. So price and timing. In the technical analysis that we use price and timing. Okay. So the goal of the chart is that usually is that we are going to find a consistent, reliable and logical price pattern with which predict future price movement. Okay. Let me okay, wait, because I can see my okay, next one. Okay, type of charts. Okay, this is very usual that you see. This is a type of chart. Just we call it. This is called line chart, and this is what we call a bar chart, and this is what we call a point and figure chart. Only the very rare or very seldom I see people using this what we call a point and figure chart, and also usually so the old generation they use point figure, and this is the oldest point of chart, the oldest, or we call what you say the oldest way, or the way of we are doing the chart. Also the oldest way that I use it since 1984, the last time, you see. But all of this that I show you, all this here is available in most of the chart or most of the chart softwares. Yeah. Okay, this is the most popular one. The most popular, there is what we call Japanese candlestick. See, it's very popular. Actually, it is quite old. It's been used in Japan since 1600 or about in 17th centuries, but only came to US about in 1990. In 1990, and come to Malaysia about in after 1978, like that. Okay. Today, I'm going to share with you, okay, what we call is the topic is a beyond candlestick. All right. So this topic was written in this book. This is called The Beyond Candlestick by the Steve Nissen. It was written in 1984. So not so long ago, even though it's been used for quite a long time. Okay, let's see. How are you going to use this simple technique to determine the three things that I mentioned just now? Okay. One. So there are three techniques I use. You can use only one. You can use all three. Which one is up to you, but I'm going to share with you all the three today. Okay. One is that Kagi, Renko, and also three line break. So there are three types, three different ways, you see, and you can use any one of them. All right. Next one. Okay, Kagi. Okay, kagi. The first one that I want to share with all of you is kagi. Okay, so kagi. Meaning is kagi actually is a key or a key. Kagi means key in the Japanese, and it's been used as you see on the slide. There is around 18,000 in the 19th century. They used all of this kagi. Okay. So this is how the kagi looks like. Okay. How is the kagi looks like? Okay. Is it available in the chart? Yes. Okay. Let me share with you where is it you can find the chart. Okay. For example, like. Okay, like this. Okay. Okay, this is how the kagi this is in trading view kagi, or you can also use, for example, like I'm from Inter-Pacific Securities, and in the even Inter-Pacific Securities, so they do have even not only Inter-Pacific Securities, all of the most of the screeners or all of this chart that is available for this. You see, for example, like let me show you in here. That is because I just want to show you that it is free. You see, that is available freely. You can use it, but seldom or very few people that use this. Okay, for example, like this is kagi. For example, yes, this is kagi. This is renko. This is a renko. Okay, this is a renko, and this is line break. Okay, this line break. So you can see that is easily available. Okay. So the word kagi comes from old-fashioned key, the L shape, also called key chart by the Japanese, and the chart thickness and direction of kagi lines depend on the market action. Okay. Right. So other name for kagi is that include as a price range, the hook chart, the delta chart, and the string chart. So that is not important with the name of that. The most important is that how to use it. Okay. So the kagi chart is used for tracking the movement and to make decision on the purchasing and also to sell, which means that this kagi can give you a signal of to buy or to sell. Okay. And in the chart, you see, usually we always look at just now I mentioned about time and price. So there is another thing. That is what we call is a volume. You see, we can see that the price and volume. Usually you can see on the chart, you can see there's a price and volume. You see, but the kagi, they didn't take into consideration of the volume. So they only show you the price action only. Okay. We can use closing price. Usually we use closing price, or a lot of modern software, they use ATR. And there is a certain amount of reversal, you see? And also we can use this reversal is usually we use point, whether it's a 0.3, usually the most common is 0.3 or 3, or we call 3 or 3 reversal, or we can use even a percentage too. Okay, but that is not important. Okay, now the most important is that I want to show to you that how to use this kagi in trading. Okay, okay, now in kagi they have what we call yin and yang. Yin and yang. So the thick one, or we call in here, you can see there's a green one, we call it yang. The red one, we call it yin. You see, because in the old days there is no color. Actually, it's only whether they have a thick line or it's a thin line. So the thick line is yang, the thin line is yin. Okay. So there are a few types of yin and yang, because this yin and yang will tell you how strong is the market. How strong is the market? Okay. So if the yin or if the yang is longer, so which means that the market is strong. If the yin is longer, so the market is a weakness. Okay, that is one. Okay, so how to use it? Which means that you buy on yang, sell on yin. Okay, so buy on yang, sell on yang. So it's very simple. Okay, so there has what we call here. We call it there's a waist and shoulder, which means at the bottom or when it come down and it goes up again, we call it, or we call it peak and trough. In this in normal chart, we call it peak and trough. In here, we call it waist and shoulder. So it's the same basically. If you follow or you learn about charting, you see there is usually in the chart, yes, the same thing, but the name is already different. So you buy on yang, sell on yin. Okay, now this is how it looks like. Okay. So where do you buy and where do you sell? For example, okay, whenever there is change, the change in from red to green, that is a signal that for you to buy. But there's a changes. You can see that, all right, where it come down, this come down, this come down. No, this is not a buying. Okay, this is showing a buying, and this you can see that there's a come down, there's a selling. Okay, let's see. Okay, let me see whether I can show here. All right, okay. This for example, this for example here. Okay, this is also a buying or sorry, buying signal. Sorry. Buying signal is here, and all right, let's say pointer option. Okay, all right. So this is buying signal. Okay, you see the advantage of this Kagi is that they will tell you that every time the price move out or the price break out, you see, there will change color. See, so basically we use this Kagi chart to determine the breakout to alert us of the breakout. You see? So you can see that a breakout or breakdown. So because in the stock market or in the trading, you see, there are only two ways for you to buy. One is breakout, second is reversal. You see, so this will tell you breakout, but not a reversal, but there's some or reversal, but usually they tell you it's the breakout. You see, for example, like in here, whereby there is come down, this is a reversal, but no, this is no signal, then there's a breakout, only there's a signal. Same thing also here, whereby you can see that there is a breakout and they will show you a signal. And here also, which means that they are sideways, is a breakout, and it's sideways, and there is a signal when there is a breakout, and also when there is a breakdown. So this is what I'm saying just now, is that I'm saying that every time when the price move, you see, when the price move higher, or the price move breakout, or price make a new high, so the color will change. So it's easier for you to see. It's much easier for you to see compared to some other types of charts. Okay. We go further. Okay. This is a buy on Yang, sell on Ying. Okay. The next one is all right. This one I told you. Later I will show you. Okay. Next one. Next one is that this is the variation of how to use this Kagi. So one of it is that the multi-level break. So which means that, for example, that in here you can see that there is a multi-level. This is what we call a multi-level break. And also at the top here we call it also there is a multi-level break. You see. So what we say that how strong is the market, that this Kagi also can tell you that whether the market is strong or not strong, or the breakout is strong or not strong by using this multi-break. But the most important actually is the one that is earlier. This is the most important, whereby that when they create a new one or there's a change in the color, that is the buy signal. And also that is break the resistance or break the support. That is the most important thing, because what you're looking for in the stock market, we are looking at the trend, we are looking at the support, looking at resistance. So here that will tell you there is a support and resistance. Okay, it's multi-level break. Okay, the next one is that the middle of the Kagi. This also will tell you or give you a indication of whether this is very strong or it is not strong. Okay, so if the Kagi, you see, or the Yang, you see, that become become young, you see, and it is above the center, or like this kind of formation, so which means that it is very strong. Let's see in the chart, is there any of this? Okay, it come down. Yes, this is the bigger one. You can see that this is, or it is here, that is like this. It is the same like the study of the chart in the western side, which is what we call it uptrend, when there is a formation of a higher low. See, so this is a formation of higher low. Okay, this formation of higher low. Yes, you see, is this one, this low compared to this low. You see, compared to this low. You see that, as you can see, that the formation is creating a higher low. So this is what we call a uptrend. So as you can see that this Kagi will tell you the trend, support and resistance, and also signal. Okay. So that is how's the beauty of this. And but as I said earlier, there's a lot of people didn't use this, but now we can try to use it, and it is very simple and it's very effective. Especially if you are trade for the medium term, not for the short term. Short term, yes, can, but then you just change the time frame. It will be lower or lower time frame. Okay. The most unique pattern in this kagi is a three Buddha pattern. See, three Buddha pattern, or in the other or chart pattern, actually we call it head and shoulder. Okay. And it is a reversal pattern. Whenever you see this kind of reversal pattern, it will tell you that the market is going to reverse. Either it is whether it's at the top or at the bottom. For example, like this. This is what we call a three Buddha pattern. You see, this is one here. You see this one here, and this is another one here. You see, and this is another one. You see, so this is showing that they are what we call a three Buddha pattern. It is a very powerful reversal pattern. Either it's from the top, or if in the western side, or using some other chart pattern, we call it inverse head and shoulders. Or in here, we call it a three Buddha pattern, or at the top, we call it either is head and shoulder, or inverse head and shoulders. Okay, that is kagi. Okay, next one is renko. Okay, renko is we call it also term neri or zigzag or whatever it is. Neri, training, or zigzag. Sometimes they call it neri, but usually we call it renko. And the reversal is that decided by predetermined, which means that we decide what is the reversal size. If you are looking for the long term, which means that the reversal size will be smaller. If you are a longer term, the reversal size will be bigger. So it depends whether you are the short term or you are the long term. So it depends. All right. Now, it just looks like a series of a black and white block. Previously, there was white and black, but now because of the computer, we have easy for us to color and all that. So usually we use red and green. Okay, red and green. So each block is called bricks. So renko they believe that renko may come from the word renga, in which Japanese are saying that word means brick. Okay. So usually we use is a closing price, and new line is added if the fixed amount is exceeded. Okay. While white price is increased, black is decreased. So it's a black and white. So this is how to what we call how to construct this thing. Right. And the change of unit, okay, never mind. I think I will skip this, because this is how to what we call how to construct the chart. Yeah. The most important, or what I say is the one that is more important, is that how to use it. Yeah, how to use it. Okay. Let's say, yes, this is how it looks like. This is a renko. I see, this is a renko. Okay, renko, and you look at it. Well, there is a red bricks, and also a green bricks. You see, what does it mean? You see, so basically, it's very simple. The the red bricks show you or tell you that the trend is going down. When there is green, which means that the trend is going up. It's very simple. Okay. So how to use it? See, is that you use it is very simple. Is that buy when white brick appear or the green brick appear, sell when the black brick or the red brick appear. Okay. Black is down, white is up, green is up, red is down. It's the same thing. The only thing that in here we use color, so for us easier for us to see as a visualize. Previously, this is a black color. See, it's black. Okay. So as you can see that this renko, you see that's renko. That is very simple. Or in the western side, we use parabolic saw. Is very similar concept that we use a parabolic saw. So which means that to determine whether it is a uptrend or it is a downtrend. Okay. So in here also is the same. So which means that we use this Renko to determine whether it is uptrend or is a downtrend. Let's say, for example, let's say that you purchase, or after this it come down, and then there's a one come out here. So there's a buy signal here. You see there's a buy signal here. You see there's a buy signal here. Can you buy? So what to do? As long as there is no red bricks, usually we use the first brick, and then if exceed the first red brick, only that we sell. As long as the brick is keep on green, we just hold it until it change or until it reverse. See, so which means that let's say for example that you buy here, and then it's a red bricks come out. Okay, you sell, and then you buy again because it's a green bricks, and and sell again, and buy some more, and you sell some more. So that is how to use this Renko. So basically, I told you earlier for us in the start of session, that is this Renko will tell you the trend. What is the trend now? See, so because that is what you're looking for, isn't it? Basically, in the stock market or in the trading, basically, if you know what you're looking for, it is very easy and it's very simple. See? But then the problem is that we tend to use a lot of things, and you end up you don't know what you're using for. You see? But if you know how to use it, or you know what to use, or you know what you're looking for, it's very much easier. So one of the usage or the most important uses of the Renko is that to use it is as a trend, or which means that one is a trend, which means the direction of direction which is a trend, whether it's an uptrend or it's a downtrend, and also a signal. So a signal. Remember, trend, support and resistance, and a signal. Okay. Next one. Okay. The next one is a 3-line break. You see, 3-line break is more like a point and figure chart. Remember that I showed you just now. There's a point and figure chart. It's a very similar to like a point and figure chart. Okay. And the reversal are decided by the market, not by the rules. And it is a series of the series of a black and white block which varying height, and we call it, each block is, we call it line. Okay, we call line. Okay. Let me see. We can use okay. We show you some example rather than if you look at you show some example. So much easier or better than this. Okay, let's see. Let's see. Okay, I believe you can look at my screen. Okay, this is okay, this is this one is this is Kagi. Okay, this Kagi. Okay, let's see, you change it to Renko first. Okay, Renko. Okay, we can change it here. Actually, we can change it here to the setting of the symbol. Because this is this is price line setting ATR 14 line. Okay, all right. Maybe if I put it in the lower time frame, we can see it's clearer. Okay. So this is how to use this Renko. No, this is yes, this is Renko. Okay, this is Renko, and this is okay. Now we go on line break. Okay, this is go on line break. So before we go here, okay, let me finish this line break first. So after that, only we can see the chart and all that. All right. Okay, next one. This one. All right. So we use a closing price. So new line added if a price is exceeded. What is this increase? Okay. Next one is the a price line. Okay, so another type. Okay, the other name for this three line break chart is include the 3-step new prices, a new price three line break, surpassing three line, the three line turnaround method, and new price 3-step bar. So these are all the name of all the names of this all of this three line. Okay, next one. Okay, let's see. Three successive line confirm a trend. The price need to break the low of the last three line before it opposite is drawn. Okay, and okay, this is how to read, because this one is slightly different. You see, the price will move up or withdraw it whenever there is a move up. When the price change, it move up. Okay, only that we draw the black line when there is it exceed a tree line. That's what we call tree line break. So which means that it goes up, and then when the price drop below the tree line, previous tree line, only that we draw the black line. Okay, so that's what they call it a tree line break. Okay, so this is how to draw. I think I just skip this one. Okay, today baseline. Okay, then drawing the second line, compare this low, all right, then shift. All right, this is, for example, how to use it. Previous high, this is the first day, for example, this is the first day, this is the first day. Okay, and if a second day the price goes higher, and then we draw the new breaks. Okay, the same thing also if it goes down. If it goes down and then the prices come down, and then it goes lower, and then we do the second break, we shift to the right, and then we draw a new one. Okay, now the next one, the second line, that is let's say now with the second line break the previous three, and only that we draw there is a new high, only that we draw the white or the white break. Or for example, like this, if there is a still new high, then we don't draw. Oh, sorry, we draw a new one, or what we call it, there is no reversal. Okay, the main purpose of this tree line is to tell us, or to tell the user, that there is a reversal. So the purpose here, there is a reversal. So because that is what we're looking for. We are looking for the trend, a stop and support and resistance, and also the support and resistance, and also the signal. So this gives you a signal, and also just I said earlier, whereby that when you buy, that is either is a breakout or it is a reversal. So here that we show you as a reversal. Okay. All right. No, I will just skip all of this. Okay, now this is how this looks like. This is how it looks like. The what we call this three line break. Okay, how to let's see. Zap. Okay, let's see now. I want to see. Okay, now the three line break. Okay, so in three line break, you see, one is that the trend. See? When there is an alternative of the red and green, you see, or black and white, red and green, you see, that is we call is a trendless. You see, so it is that in the trendless session, it's very difficult for us to make money because we can determine whether price is going up or is going down. See, but then if the price is trending, so it's much easier for us to make money, or for us to buy and to sell stock and make money. Okay, trend confirmation. Okay, how to determine the trend confirmation? Okay, the trend confirmation is that when there are three consecutive white or black line appear, or the trend reversal when the turnaround line appear. Okay, how is it? Okay, now let's say now. Okay, trendless. Is there any trendless side here? Trendless. Not really. This one is just no. Okay. Trend confirmation. So trend confirmation which means that they show three consecutive white line appear. For example, like this, there is a 1, 2, 3, and this is all, which means that they, the price change and it exceed the three previous brick and create another brick. There's 1, 2, 1 here, 1 here, 1, 2, and also here 3. So that is what we call a uptrend. The downtrend is the other way around. For example, like this, 1, 2, 3 here. You see in here there is this is a downtrend. Here also the same thing also. So 1, so 2 and 3. So we know that there is a downtrend. Okay. The reversal is that when there is the first change, that is what we call a reversal. For example, like here, this is a reversal. Okay, this is a reversal. These are also a reversal. You see, and this is also a reversal. Okay, so this one. So there is one. Okay. Now the next one. How to use this 3-line break in trading? Okay. One is that buy when the green line appear. For example, like here, the price come down. You see, as you can see here. See the price come down. You see all the way down. You see, and there is a new green brick appear. So that will tell you that is a reversal. See, because that's what we're looking for. You see, we are looking at either it is a breakout or a reversal. So that is why this technique or this using this, which is free, is you can easily to determine on the reversal of a certain stop. Okay, so this is a reversal. Same thing also is here, but unfortunately, ladies and gentlemen, actually this one is a failure. We call it failure here. Sorry, this one is a failure. Failure, which means that it shows here that the price changed, but it didn't change, which means it's supposed to be bearish, but instead of bearish, it reversed and become bullish. This on this one. Okay, next one. Let's say what else? Okay, okay. For example, all right, this one. Okay, this is also we call reversal. You see, reversal, and this is where that you sell. Okay, this is this you sell. Okay, so there are two basic usage of here, or you have three also. Trend. They give you a reversal and also a signal. Buy and sell signal. Okay, and usually you have to wait for this brick to complete first. Okay, this is how to use it. Okay, now the next one. Okay, we go for the next one. All right, so the confirmation, you see, for example, the confirmation, you have to wait. For example, let's say now the market come down, you see the price come down, okay, and then there is appear one brick here, for example. You have to wait for the next brick only that to confirm that there is a change of trend. See, for example, this is the confirmation. See, this is a confirmation candle, or this is a confirmation bricks that show or that tell you that it is already change of trend. Okay. Okay, this one, okay, the same thing is yes, this change of trend. So, and the only disadvantage of this technique is that you have to wait between the risk and reward ratio, because if you wait for too long, your reward is getting smaller. See, but if it's too fast or you act too early, which means your risk is higher. So you have to compensate between these two. Okay. One of the best technique, or one of the most something that is very special to this technique is what we call black shoe, white suit, and a neck. This is a very special to this 3-line break. You see, a black shoe, white suit, and a neck. If in Kagi, we call it Tri Buddha. So that is the one that is a reversal. This is also a reversal pattern. White shoe, white suit, and a neck, or black shoe, or black shoe. Black shoe. Okay, we go one by one first. Okay, right. Black shoe, white suit, and a neck. So why is it? How does it like? It's like this. Okay. So when market come down, as I said earlier, it is a reversal pattern. Okay. So market come down. Market is on the way down like this. So it's down. You see, as you can see, it's down, and the last break is small. That's why we call it shoe. The next one, reversal, it is a white, or we call it which market is a reversal, because this reversal, you see that exceed more than 3 previous break. So that's why there's a reversal. Second, the third one is that there is another one, or it is a smaller break that this form after the long break. This is why you call it black shoe, white suit, and a neck. This is a very powerful buy signal. Sell signal is the other way around. White collar or white neck, black suit, and also a black shoe. See? This is how it looks like. White neck is a black suit, and also the black shoe. So this is a very powerful reversal signal, or we call that is a change of trend. Okay. Let's see in the chart. Okay, I just picked up randomly. It was a chart, whatever. It's still the same thing. Okay, this is how it looks like. Okay, this is what we call a. As you see, the price is going down. You see the price is going down, and this is a black shoe, white suit, and also a neck. As you can see, after that, all the price all the way up. See, and in here also, okay, in here also there is a white neck, and let's see another one. All right, this here, white neck, black suit, and also a black shoe. See, so the price come down all the way. So this is a very powerful pattern, or this is a very powerful pattern that is will show you the reversal. Okay, I want to show you the what we call the real example. Let me see whether I can see the pack online. Okay, let's see this one. Okay, I want to take the more expensive counter. Let's say we take okay, we put on daily. No, it is too long. Okay, all right. Okay, as you can see, can you see the, for example, okay, let's say for example in here, okay, let's see, I want to go for here some, or no, okay, here, all right, here, okay, the price come down. You see the price come down here. Where is my brush? Okay, the price come down here, come down. See, and there is a black shoe, white suit, and a white neck. So this is a reversal. I can see after that it just move up all the way. See, same thing also is here, whereby there is a white neck, black suit, and also the black shoe. And you can see after that the price all the way down. Of course, you can change all of this. You can change the time frame and all that. You can change all that, the time frame. Okay, so that is the what's this? This is a 3-line break. Okay, let's say we change to the one that we learned just now. What we call the first one is the kagi. Okay, kagi. Okay, let's kagi. All right, so this is kagi. All right, let me clear it first. Okay, let me show you slowly. No. Okay. Okay, all right. This is how the kagis looks like. If you have a trading view, you can use this as trading view. What you can use is this is the how to change the kagi. In here, there's a kagi here. The most important, how to read the kagi. That when there is a change from the green into red, which means that it tell you there is a support and or what we call is break the support or break the resistance. For example, like here, when the price goes up and it come down, and then this it tell you that they break the resistance. It break the resistance and it goes up. Okay, it goes up, break resistance. And here, when it's become red, it tell you that it break the support. So yes, you can use, perhaps you can, for example, let's say now you can use candle, for example. Okay, you can use candle, you see. But then when you use candle, is sometimes is a bit, we cannot see very clearly where is the direction of the market. Okay, but by using this kagi, you see that you can see clearly or much clearer of the direction of the market and also the support and the resistance. It depends on what we are looking for. If are we looking for a trend or we are looking for support and resistance. So if you are a trader that use a lot of support and resistance to trade, this is a good indicator or a good tools that you can use to buy and to sell, or to give you a signal of to buy and to sell. And this is very powerful. Okay, so whenever there's a change, you just wait for the thing to change from red to green. There's a buy signal, and then from this green to red, there's a sell signal. But of course, see, of course, you must have your own trading plan, which means that you have to establish what is your price, your timing, your time frame, your stop loss, you see, and your betting size. With all of this, you must have what we call a trading plan. You see, you must have a trading plan. This is only a tools that for you to use to make a decision to buy or to sell, because the most important is trading plan. Okay, but this is good because it tell you whether it is going down or it is going up. Okay, this is a kagi. Okay, now let's say another one. Just now we look at instead of kagi, we look at renko. Okay, renko. Okay, renko is used for the trend. You see, for the trend. So when you use the renko, as you can see that if there's a change straight away, you can look at, or you can detect there's a change in the renko. See, I'm using of 4 hours. As you can see that even if whether it is a short term or the long term, it can be used. Whether it's short term or long term, it can be used. For example, like here, they can tell you that which means that the price is going down. It's a change in the price going down, and once it's changed from red to green, that is the time for you to buy. Okay, there's a false signal here. Okay, after that it goes up again. But overall, you can see very clearly that this technique will tell you what is the position or what is the trend at that particular time, whether the market trend is going up or market trend is going down. Okay, the next one, okay, next there is a renko. Okay, another one just now is renko, rank break, three line break. Okay, three line break. Okay, this is okay. I showed you earlier. Okay, let's say some other counters. We look at tenaga nasional. Okay, this is. I show you 4 hours because it is have a more data. It is sometimes just 1 day data is sometimes not enough. Okay, let's say now it's not 1 day data. Okay, let's see, make it bigger so that you can see clearer. All right. Okay, there you can see a lot of this is a white knight, black suit and black shoe. Even though the shoe is very big, you see, but it's still the same. You see, it goes down. It's same thing also, and it goes up. Black shoe, white suit, and also the white knight. Yeah. So all of these you can use for this technique. There are so many ways, or there are so many for you to use, and it is a very what we call very useful. Sometimes you can't see in the candle or in the candlestick chart, but you can see it much clearer in this kind of charts. Okay, so I have another 15 minutes or 10 minutes. All right, 10 minutes. Okay, 10 minutes. Perhaps I can if you have any question, maybe I can answer you some question. Let's see. Where is the question? All right. Okay, I can now consider the question. Okay. All right. The question is that the Kagi tree-line break can be used for FCPO and other fast-moving securities. Yes, the answer is yes. As long as the data or there is continuous market, you can use all of these three. You can use Kagi, Renko, you can, as long as it is a continuous market. Continuous which means that all the instruments, for example, like securities, FCPOs, or the derivatives and all that, you can use. You can use any other thing. In fact, you should the original usage. You see, the original usage of this technique actually is they are use it in the futures market, because in Japan the first futures market is in Japan. So they use this to track the price of rice that time in Osaka, and one of the oldest futures market in the world is in Japan, basically. So they use this technique to determine or to forecast the price. So they use this technique beside this candlestick, because a lot of people are saying, oh, use only candlestick. Actually, they are instead just not only candlestick, they use this Kagi, Renko, and also tree line breaks. Okay. How to use the chart you just shared to tell the support and resistance level? Okay, there are a few chart that you can use support resistance. Actually, Kagi is very good to tell you the support and the resistance. Meaning that if you change color, from green into red, which means that it break the support. When it change from red to green, so it tell you that is a break the resistance. So that is very what we call is simple or very easy for us to use. Of course, I'm very sure most of you are very familiar with this candlestick or the bar chart or line chart or mountain chart and all that. But this is one of the way that we can use, or because it's free, it's available. Very few people use it. Maybe you can use it. It's slightly different from other people, or it is much easier for you to use it. Much easier for you to clear the trend of the market, the support and the resistance, and also the signal. Okay, next one. What is the best free chart tool that is FOC can be used for investors? All right, most of the brokers or most the investment bank or brokers or participating organization that in your platform, they do have the chart software. Inside that chart software, they have this Kagi, Renko, and also tree line break. Most of the software they do have. In Inter-Pacific, we are using end-to-end. They have the chart. Let me share you this one. Okay, let me show you on this Inter-Pacific platform. Okay, this is Inter-Pacific platform. Okay, let's say you just pick any country will do, and we change it into analysis chart. And there's an arrow here. You just click the arrow here. There's come up. There's a menu here, and you just change it to Renko. So there's a Renko there. Okay. So it's free. You change it to line break. Okay. This is the line break. And if you want to change it to Kagi, okay, this is Kagi. So you can see this is all you can change the height and all that lah. Okay. So basically, it is free. You can see this what we call is is free, or it is available, very easily available. Okay, this Kagi, Renko, and let's say there's a Renko, and then you can change the record, how many record you want to see, whether it's a 100 or 200, or whether it's how big is it. And you can see they have a volume here, but it's no volume. All of this basically just a price only. Right, next one. Okay, next question. All right, next question. Okay, right, okay. So to Haji, okay, your share is very good. Can I use it now to trade? My question is if the shoe is thicker than the suit and the neck, is it mean it is a weak reversal trend? Okay, good question. Okay, let's say now, for example, okay, let's say we look at the real example. Okay, you see, if the shoe is thicker than the suit and the neck, see, it might be a fall a signal, or it is a bit too fast. It's a bit too fast. So in the charting, or what we call in the charting technique, you see that we have to wait the formation. When there is no formation, don't try to look at it and try to imagine. Find the what we call is find the pattern: black shoe, white suit, and white neck, for example. Okay, for example, like let me see in here, got any okay, all right, here, as you can see, this is a white neck, this is a black suit, and this is a black shoe. You can see how to determine it, or how going to read it. The neck must be shorter. It means this way. Actually, the name is not really important. What does it mean is this way. The first break is small, the second break is long, and the third break is small. That which tell you that the price is going to change, or is going down all the way. See, so that's how to use it. For example, like this. Okay, in this set. All right. For example, like here. Okay, here, for example. Okay. Not really good. No, this is not really good. Yes, this one can. This one, black shoe, white suit, and also white neck. White neck, you see, white neck. So if it tell you that one is small, the first one is small, it's called shoe. The second one is big, they call it suit, and the third one is neck, this is small. So that is how that you know how do you use it. So if you can't find it, don't look for it. You look at it, just look at it once. Okay, yes, there is a formation there. Then you know this is going to change, because this is a very, very powerful reversal pattern. Okay, and okay, next one. Okay, may I know what is the most effective time frame to be used for Kagi and Renko? 1 day, 30, 50 minutes. It depends if you are a short-term trader or you are a long-term trader. Okay, but usually we use is 1 day. 1 day, which means that we use a closing day, which means that we use 1 day and closing price. That is what we use. Usually, that is what we use. Okay. Because in the stock market, or in this technical analysis, that what you're looking for is that when there is a formation, only that we identify. It's not that we try to find that kind of the what we call the formation or the pattern. Okay. Okay, there is I think there is all right. Okay, sorry, I got there is a question somewhere here. All right. Okay, what is the recommended other indicator as a MACD that work well with Kagi, Renko? Yes, we can use all of this also, but sometimes it's not very what we call is not very effective. Usually, what I add on all of this is that the volume. You see, the volume. Usually, at this, let me show you. Okay, volume. Volume. Okay, all right. This volume. That is my indicator. My template. No, not this one. No, not this one. Where is it? I can't find my AVR. ATR, monthly high, and smart money, combo, Bollinger Band, ABCD, PA study. No, I can't find it here, because okay, we use it, or we add on the volume, because there's no volume, so that we know that is which level that there is high volume, so that usually we use that. Can we use the Kagi or we can use the other indicators? The answer is yes, but then not very effective. Usually I use this only looking at the changes in price. This is no, this you don't need to use all this MA. Some people they use it. Some people also they use the MA to for combine with all of this. Yes, they do use this one. Okay. All right. Next one. Last question. All right. Among the three, which is the better one for indices day trading? You have to try it actually. I'm not very sure, but you have to try for that. Okay, I'm not very sure about which one is the best. You see, because all the three is using all a different way of using it. Okay, I think that's all the question. Yes, that's right. You can't find it, don't look for it. Yes, that's right. You see. Okay, is there any question? A last question? Yes, all right. Okay, thank you very much to all of you. Congratulations that you stay till the end of the program. We have another session after this. And I want all of you to be healthy and safe from COVID. Thank you very much. And we see you again, or I see you, all of you again, in some other sharing session. Okay, thank you.
Ladies and gentlemen, good evening. Wherever you may be, I trust you are safe and sound in the comfort of your home. As many of you are aware, earlier today we had some technical difficulties during the launch of our inaugural virtual BURSA Marketplace Fair. I would like to sincerely apologize for the inconvenience it must have caused you all. Let me assure you that we will be doing a thorough post-mortem review to determine the cause of the problem and to ensure that this will not happen again in the future. It took a while to sort out the technical glitch, but I am glad that we were able to provide alternative means of access, as many of you were able to view the speaker sessions on YouTube. And by midday, the speaker sessions were also made available on our FB Live channel. I very much appreciate that all of you had blocked your precious weekend time to attend this fair, and that I know how frustrating it must have been not to be able to get into the virtual conference. So thank you very much for your patience and for participating in today's event. And again, please accept our sincere apologies for this morning's technical problem. Ladies and gentlemen, I would also like to express my thanks and gratitude to our distinguished speakers and business leaders for the insights you shared, including plans to make the corporate journey toward economic normalcy. I would also like to thank all our industry partners, participating organizations and exhibitors for your unwavering support and contribution towards the success of this virtual investment fair. Please accept my sincere apologies for the delay and the problems caused by the technical problem. Ladies and gentlemen, notwithstanding the difficulties today, we are extremely encouraged by the number of Malaysians who visited our fair throughout the day, which numbered more than 7,000 participants. Improving financial literacy has long been a key focus area for BURSA Malaysia. So we truly hope we've managed to bring this to you throughout the course of the event. We have observed that more Malaysians are taking responsibility for their financial needs. Retail investors today are generally much savvier compared to a decade ago. We have noted that retail investors are taking a keen interest to learn more about investing. This can be seen by the strong participant registrations on our digital platforms. The BURSA Marketplace platform has seen an increase of registered users of more than 873,000 since its inception in 2014, with 26% of new registrations occurring just over the last 2 years. Our Mirror Learn and Trade platform has registered over 50,000 users since its launch in late 2019. Ladies and gentlemen, the shift in how we save and invest will have a very significant effect on our economy, the market, and society at large. Investors need to understand equities trading from a fundamental and technical perspective and trade in an informed manner. Undertaking proper research and assessment is crucial for you to invest in an instrument that matches your risk appetite and investment goals. By bringing the right knowledge and tools to you, we hope to impart the idea that investing in the capital market can be a viable way to grow your wealth and achieve your financial goals. The thought of entering the stock market need not be intimidating, especially if you have all the relevant information. However, you do need to choose your investment products objectively, assess the risks rationally, and plan for your financial future wisely. Further, the COVID-19 pandemic has taught us that saving early and having a long-term investment plan is not only smart and sound, but it is necessary. Therefore, I strongly encourage all investors, especially those who are new, to make full use of our educational platforms, which are free for all to use. We intend to provide you with more channels, webinars, and service enhancements to complement your investment journey, so do stay tuned to BURSA Marketplace. Ladies and gentlemen, I would like to end by sharing that all the talks today have been recorded and they will be made available online. We will send you details on how to access the recordings so that you can catch and listen to the talks at your convenience. So please continue to stay online for a little while longer, as right after this, we will be announcing our third and final lucky draw giveaway, as well as the winners of our tournament. Once again, please accept our sincere apologies for today's shortcomings. And thank you very much to everyone for continuing to trust BURSA Malaysia. Stay safe and have a great weekend. Thank you.
you.